that way, suggesting at least a small split in the committee. A couple of participants pointed to downside risks to the economy associated with maintaining an overly restrictive stance for too long. Although they did not have January's stronger jobs and consumer price inflation data numbers, participants noted momentum in aggregate demand might be stronger than currently assessed. Several also worried the risk that financial conditions could become less restrictive could add undue momentum to aggregate demand and cause progress on inflation to stall. Geopolitical considerations got a small nod, as did slower growth in some foreign economies. And then finally, on the balance sheet, members agreed it was important to continue balance sheet reduction at its current pace, feeling so far it had proceeded smoothly. Many of them said it would be appropriate to begin in-depth discussions on the balance sheet at the March meeting, something Chairman Jay Powell had confirmed in his January 31st news conference.
All right, Michael McKee, of course, our Bloomberg News international economics and policy correspondent, live there at the Federal Reserve. Mike, do not go anywhere. Quick check on the markets, everyone. And a slight uptick, very slight, when I look at the U.S. Treasury trade. That two-year note right now yielding 466, which was just pretty much where it was right before the minutes release. 10-year note going to the longer end of the yield curve, 432, which is pretty much where we saw that prior to the release of the minutes. Quick check on the equity side of things. Of course, the focus very much on NVIDIA reporting after the close. And we are seeing equities move a little bit lower here on that news. So we'll continue to track that. In the meantime, I do want to get back to Mike here. Mike, it doesn't sound like there were many surprises here, if any.
No, and one of the problems that the minutes have now is most of what we have heard in the minutes has already been discussed by Fed officials between now and their meeting. That was 3 weeks ago, so we have a pretty good idea of what they were thinking. There isn't much in here except maybe the idea that there are more people leaning against the idea of cutting too quickly than moving too slowly. That is the one major concern that comes through here. But I know a lot of people are looking for guidance on what they're going to look at when they decide they're going to start cutting rates, and that's not in these minutes.
And, you know, another thing that's not in those minutes is that very disappointing CPI number that's really changed the way market participants are thinking about the timing of the rate cuts. And, you know, Mike, I wonder if you see anything in the minutes that policymakers, knowing what they now do about that latest CPI print, would perhaps go back and rethink or reassess.
Well, there were hints, especially in that line, that the economy might be stronger than anticipated, that they were concerned these sorts of things could happen. But of course, this meeting was 2 weeks before that CPI report came out, and it was 3 days before the employment numbers came out. So they didn't really know what was going to be happening. There has been a concern all along among Fed officials that the economy was stronger than anticipated, and that could be an inflation problem down the road, but it's not specifically reflected in these minutes.
All right, I do want to bring into our conversation Bloomberg Economics Chief U.S. Economist Anna Wong. She is joining us as well. She is joining us from our D.C. bureau, also there at the nation's capital. Anna, what jumped out for you in the FOMC minutes? As Mike kind of laid out, it doesn't feel like too many surprises, but give us your take on this.
Yeah, so, you know, what has puzzled me over the past couple months is why did the Fed feel like they need to hold higher for longer, even though, because if we looked at the reaction from
from the UK, and I'm the inventor of the gel razor, and today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September. With copyright protection, I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Fed thinks the neutral rate is.
Yeah, so I think that the likelihood is still tilted toward rate cuts rather than rate hikes. Our NLP Fed Speak model does suggest that the probability of a rate hike is 13.3%, and that is quite similar to the assessment of former Treasury Secretary Larry Summers. But I think that given all the range of policy tailor rules that the Fed follows, none of them would say that the Fed should be hiking at this point.
And then, Mike, what do you think about the possibility of a hike at this point?
I agree with Anna. The rules and also what Fed officials are saying rule out any kind of rate hike at this point. If they felt the economy was accelerating too much and inflation was starting to become more of an issue, they would just leave rates higher for longer to see what would happen. It's not on the table. Larry Summers put it there, an interesting discussion point, but it's not something that Fed officials are considering right now.
Well, I go back to, Mike, some of the conversations we've had around this table that as the Fed gets, to the end of its cycle, and we think we've peaked out here in terms of rate increases according to what we got from the Fed chair. But having said that it is more difficult towards the end, is there some truth to this as we continue to see data points that come in stronger that make you think, well, wait a minute, is it just a case of staying higher for longer, or the possibility that we could, considering some of the data points we could get down the road, that the Fed would have to raise rates? I mean, is it silly for us to rule it out completely?
I wouldn't rule anything out completely. We don't know what's going to happen down the road, but it's going to be some time before that even becomes would even become an issue to be considered. The strength of the economy, sure, and the fact that we haven't had an effort to try to get down to a 2% level before, it could be very hard to do that. Get that last mile, that last percentage into out of inflation, rather, down to 2%. So Fed officials are going to be making a decision on when to start cutting based on what progress they see in that regard. But they're not at this point looking to raise rates to push down inflation any faster.
Mike, if we could just stick with you for a second, because I want to go back to the text of the minutes. And I wondered if you could talk a little bit more about what officials were thinking about their quantitative easing / quantitative tightening program.
Well, they don't go into a lot of detail about it, but they do say that it's been proceeding smoothly at the pace they've been going at, and that at some point they would make a decision, but they don't put any timing on that. They will have an in-depth discussion in March towards an eventual decision, is the way they said it. But it has been working all right, and they have been seeing the reverse repo funds decline as that's become less important. And so it's all pointing towards the fact that sometime in the future, maybe not too long from now, they will start a taper. They did suggest that a gradual reduction in the balance sheet sell-off is appropriate, and that they would make that decision down the road.
All right, so not a ton of market reaction as we've gone over. Having said that, Anna, I want to go over to you in terms of what's your next focal point when it comes to thinking about Fed policy moving forward and really the health of the overall U.S. economy?
Yeah, I think the next focal point would be the core PCE. We got CPI and PPI data last week, and that seems to imply that the January's core PCE and Powell's preferred super core would be running pretty hot. If it's true that the January readings is just noise reflecting seasonality factors, then could be possible that the February inflation reading would be ugly as well, because typically these seasonal factors also repeat itself in February. So it is really only in after the February inflation data that do you really get a good signal of what really is happening to inflation. So I would say markets should be ready for a wild ride, even for February's CPI data.
Shocking, as we've often talked about the volatility that we've seen certainly in the rates market and the Treasury trade. Hey, Mike, also to you, last question. I got to cheat a little bit, heard you earlier on television. You are looking ahead to when Fed Chair Jay Powell is up on Capitol Hill. That's important.
That's going to be important. We have a lot of Fed speak between now and the end of the month, but a lot of it will just kind of go away in the sense that Jay Powell rules all. And March 6th is the first day of his semi-annual testimony to Capitol Hill. He'll be talking to the House Financial Services Committee, and that's the one that the markets are going to focus on. That's where they're going to expect to get some guidance. Don't know what he'll give them, but that is going to be a day where we will probably see markets move in terms of the Fed and not NVIDIA.
All right, net, it's data point to data point, Fed speak to Fed speak, and anything that Jay Powell does. All right, guys, thank you so much. So appreciated. Of course, our Michael McKee at the Federal Reserve in Washington, D.C. is international economics and policy correspondent here at Bloomberg News. And our thanks also to Anna Wong, Chief U.S. Bloomberg Economics.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
They've got a lot that they've got to live up to, and then you've got to sort of wonder, there's two sides to this. They're developing the hardware and they're developing the way to satisfy market demand, but how long can market demand last? I mean, what are its customers saying about their ability to keep spending in a way that will keep NVIDIA's products ticking over?
There are a couple of dynamics there. About 40% of NVIDIA's revenue now comes from companies like Microsoft, AWS, and Facebook, and they have been spending at an extended level, and a lot of their spending has been going into NVIDIA. So obviously there is concern about the sustainability of that, but Jensen Huang, the founder of NVIDIA, he's already moving on to the next thing, and for him the next thing is that governments around the world, that corporations around the world need their own AI infrastructure, and guess what? We can provide it, is the pitch he's been making. So you could argue that if he's successful in that push, that there is a much bigger market than just this small concentration of a few companies, albeit companies with large pockets. So those are the kind of push and pull in terms of tensions about the sustainability. Yes, there is concern because of the concentration, but at the same time, NVIDIA is aware of that and being very proactive in doing something about it.
But if you're going to be concentrated, it's not bad to have Amazon, Microsoft and Meta in your pocket. They have also deep pockets, having said that. Hey, listen, Lisa Abramowitz in her daily surveillance newsletter noted today how NVIDIA is the only game in town when it comes to some of the hardware and software most vital to large language AI models, and that dominance in both those spaces helped create a huge moat. She said that citing Mizuho Securities USA's Vijay Rakesh. Is that how we see it? That's why there is so much value. This is why we talk about NVIDIA so much?
Yeah, I mean, if you're making a chip that costs you probably $2,000-3,000 to make, and you're able to sell it for recent price I saw online was $90,000 for one chip. Clearly, you have something that people want. That said, NVIDIA is up against companies that have resources and have capabilities. AMD has got a new rival chip out. Intel is trying to get into this market, and your very customers are also developing their own chips, Microsoft, just to name but one. So there's clearly an effort out there to catch it and do something about this choke point that it has established on the market. But at the same time, it's been working on this for years. And the argument is you don't turn up with something overnight that's as good as what they've done, which is a combination of software and silicon. And anyway, they're probably going to come out with a new chip this year, which is going to be way better. So, yeah. So, the opponents are very much in a, prove it to us situation right now.
Ian, just real quick, we don't have a lot of time left. Can you tell me what's the biggest risk that investors face now for a disappointment today from NVIDIA?
Well, the risk is, I mean, it's probably going to be fantastic, but the risk is going to be just how fantastic is it, right? The expectations are clearly beyond even what a consensus is projecting. So how good is good enough at this point?
I love that. It's going to be good, but it's like, is it good enough, basically? It comes down to it. Ian, as always, thank you. We know it's a busy day, and it's going to be busier later on for you, so thank you so much for a few minutes here. Ian King, U.S. Semiconductor and Networking Reporter at Bloomberg News on Zoom from San Francisco. He'll be all over this when it comes out after the closing bell. And NVIDIA, though, we're looking at 4 days of losses on this name. It's down another 3%. So the run-up to this, we've been seeing investors pull back a little bit.
It's really interesting because the thing is, it's really just so much of the anxiety and the anticipation of the earnings, but they do earnings every quarter, so you'd think we know how to deal with it by this point.
And as Ian said, it could be 3 consecutive quarters where revenue has tripled if it happens today. So we'll be all over it, folks. You are listening and watching Bloomberg Business Week.
on Wall Street. We do check markets all day long here at Bloomberg. Equities do remain under pressure as the latest Fed minutes show officials are in no rush to cut rates. And of course, we have got NVIDIA coming up after the close of trading. NVIDIA shares right now, they are down 2.9%. Complete coverage on Bloomberg Radio and television as those numbers from NVIDIA hit the Bloomberg. Right now, NVIDIA shares, they are lower by 2.9%. Bottom line here, a lot of red on the screen today with the S&P 500 index now down 13, drop there of 0.3%. Dow Industrials down 78, a decline right now of 0.2%. The Nasdaq Composite Index down 111 points, down 0.7%. 10-year yield 4.31%, the 2-year 4.63%. Spot gold trading lower, little change right now, down 7 cents, 2024 an ounce, while West Texas Intermediate crude is up 1.2%, 77.93 a barrel. Keeping an eye on Toll Brothers shares, they're up now by 4.6%. Toll reported earnings last night, and Amazon shares are moving little change right now. We've got Amazon up 0.7%. Finally joining the Dow Jones Industrial Average, Amazon goes in. Walgreens Boots Alliance coming out. Walgreens lower today by 3.1%. Also today we've got Uber replacing JetBlue in the Dow Transportation Average. Uber down 0.6%. JetBlue lower by 3.6%. Recapping, stocks lower ahead of NVIDIA earnings. S&P down 0.3%. NVIDIA one more time, down now by 3.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. I'm here with Jennifer Ryan, Bloomberg News editor for U.S. Markets. Tim is out today. Now, we did kick off the hour with the minutes from the Fed's last meeting. It was held, of course, at the end of January. And if you remember, though, at that meeting, at that press conference, Fed Chair Jay Powell came out and said, let's be honest, this is a pretty good economy, right? He kind of said it several times.
Exactly. And so, Enda's here to tell us, what does that mean for the rest of the world?
Yeah, exactly. And this is a story that is in the new issue of Bloomberg Business Week that comes out later this week. Bloomberg News global economy reporter Enda Curran gets into the dangers, though, of relying on the U.S. to power the global economy. Enda is in our Washington, D.C. bureau. Enda, so good to have you here with Jennifer and myself. We talk a lot about the U.S. economy outperforming globally. We just talked a little bit about it with Mike and Anna Wong as well. Remind us, though, give us some context on how well the U.S. economy is doing compared to some of the other economies, especially some of the developed economies around the world.
Yeah, well, hello, both. It really is striking what's happening right now. As you know, with the US, things are going pretty well. Jobs are plentiful. Consumers are still spending. That recession has become a bit like the Waiting for Godot play, just hasn't arrived yet. Things ticking over pretty good. But around the rest of the world, you have Europe fighting stagnation at the moment. You have ECB officials over there warning of pretty slow outlook there. No sign of turning a corner just yet. The UK slipped into recession last year. Germany, of course, struggling with a big industrial slowdown there. And then you spin the globe, you go to China. China, of course, is marred by this real estate slump now for the past couple of years that they still haven't managed to turn a corner from. And then within the economy itself, they're having the worst run of deflation since the Asia financial crisis. And then next door in Japan. Japan surprisingly fell into recession last year. And really, I think, just beginning 2024, it's put into context just what is going on at the moment, which is the US really has streaked ahead in terms of economic performance. It is an outperformer versus the rest of the world. And that's partly why the IMF upgraded global growth forecasts this year. The question, of course, is can you have too much of a good thing, and how long can that last?
Yeah, I wondered if you could dig into this a little bit more. I mean, it's not obviously great to have just one economy powering the whole rest of the world, but can you unpack for us a little bit more exactly what the dangers really are there?
Absolutely, Jennifer. I mean, it cuts both ways. So let's just go with where we are right now. That is, when the US is doing well, it means the dollar is strong and interest rates are high, and that's what's happening. Now, that spills over to the rest of the world, especially emerging economies, because they do a lot of borrowing in US dollars. And that means they're having to more or less match US interest rates. It makes their borrowing more expensive, and it makes their homegrown central bank policy tougher on their own economy as well. Even if they want to ease, they can't really ease if the Fed is where it's at. So there's a strong dollar, high US interest rate spillover story on one side, and that's a real issue for emerging economies. And then, if you flip it around, you also have to say, well, hang on a sec, what happens if the US engine goes down? I mean, China is already, at 5-odd%, fairly slow relative to where it has been in recent years. And as I say, no real sign of a dramatic recovery there. Europe is certainly in the doldrums. Both of these economies will probably improve this year, but not necessarily in an outperforming kind of way. And it raised the question, if the US went down, where would global growth be and where would the global economy be? Well, it would be in a much slower place, because the US is the consumer of last demand right now. They are propping up a lot of the manufacturing and export trade around the world, and that's why it's in something of an imbalanced position. It would be better if a couple of engines were all motoring at once. Instead, we really only have one firing on all cylinders, and that's the US.
It's like a plane, right? You want to have a couple of engines just in case one goes down.
Exactly. But now, let me come back to this point about the dollar that you were making, because if you were to just sort of game this out in your head and you saw the US really start to deteriorate, presumably you'd start to see a bit of weakness in the dollar. And who's that going to be good for? It looks like, just from what you were saying, that might wind up being a win for other countries. And so really it might not wind up being so bad.
No, that's true. If the US was to come off, we'll say, in a nice gradual sort of soft landing, so to speak, interest rates come down, pressure comes off the dollar, that does help emerging economies. It allows them to bring down interest rates. Some of them already have, like Chile and Brazil have been bringing down interest rates in anticipation of the Fed doing so. And of course, it takes pressure off their borrowing costs. Now, of course, the point is, though, if you have a slow US economy and the rest of the world is slow, then you're going to have to be asking questions about where does the demand come from in the first place. A lot of those same emerging economies are relying on US demand to buy their goods. But ultimately, a lot depends on, can the US pull off this famous soft landing. We just had the minutes, by the way. I'm sure you were looking at those, and they're making the point that maybe the disinflation process stalls, and if that happens, US rates stay high. Well, that's probably not what emerging economies were expecting this year.
I want to go back to something you said, and you also write about it in this story, and is this idea that if China and Europe weakens even further, that this could expose the U.S. to a shock that would leave the world without that growth leader. It feels like we are underestimating that big time. What are you thinking? What are you hearing about how this kind of scenario might potentially play out? Are we talking global recession? Is there some global crisis that's part of this? How are you seeing it?
Well, it's a fair consideration. As we say, the starting point is China is expected to have a better year, but it was expected to have a better year last year. Exactly. So, people are asking questions. What does happen if China's real estate worsens from here? What if the authorities don't come to the rescue the way they are broadly expected to be? And we've already seen the Lunar New Year holidays, a fairly mixed report card in terms of what consumers are doing there. So China's not out of the woods yet. And then, of course, you have Europe continuing to battle stagnation. Certainly no sign of animal spirits in a reversal or turning that scenario around either, all of which will threaten blowback, dragging on the US. Fed officials have flagged this as an issue. It was in today's minutes as well, by the way. And then you throw in the geopolitical concerns. I mean, so many worries about the conflicts going on around the world right now, so many worries about the inflation, the confidence and the growth spillover effects from all of those. So there is global risk to the US from the events around the world, and as we were saying earlier, if they were to play out, materialize, whereby the US engine was started to cool as a result, well, there wouldn't be a lot left to pick up that slack.
And there's a saying, if ifs and buts were candy nuts, we'd all have fun at Christmas. I do feel like, once again, we're at this predicament where there are so many different scenarios in terms of how things could play out on a global scale. We do it when we kind of think about maybe even what the Fed might do ultimately, whether it's higher for longer, people talking about raising rates, maybe still cutting rates. So I just do feel like we're at this interesting time in the U.S. economy and the global economy where there, as you said, geopolitical risks. There's a lot of things that could come at us that we're not quite sure what comes next, and that relying on the U.S. solely as the growth engine could be ultimately problematic.
Yeah, no doubt about it. And you're absolutely right. I mean, there's an element of crystal ball gazing this, but this is the thing about the US and global economy right now. Most experts will say to you, it's been a very unusual time since the pandemic, during the pandemic and since the pandemic. Things haven't gone the way people have expected, and that's where we are right now. There's a whole smorgasbord of risks that could happen. Some will happen, some won't happen. But the end result is, broadly speaking, the three engines of global growth, China, Europe, and the US, are in very mixed position. China has not yet pulled itself out of its real estate funk. It was expected to have done so by now, but it hasn't. Sentiment remains very negative. Investors pulling out and foreign investment looking elsewhere. Europe, as we know, remains in the doldrums, fighting various issues on so many fronts. it comes back to how long can the US continue to outperform the way it is. And even without getting into the recession rabbit hole, the economy here is expected to slow this year. The jobs market is expected to loosen. And at some point, consumers are expected to at least slow their spending. And that would have a scenario whereby one of the great suctions of global exports right now, the US will be coming off the ball. And as I say, there's not a lot left to fill the gap at the moment.
You know, we've just got a minute and a half left. So there's one kind of trick question I'd like to ask you. Your headline is "The Dangers of Relying on the U.S. to Power the Global Economy," as if, somebody's taken the decision. But the dollar is the world's reserve currency. I mean, what's anyone supposed to do about it?
Tempted to say I don't write the headlines, but I'll take responsibility.
Editors,
I'll
are you
claim
listening?
Yes, I'll claim responsibility. No, there's not a lot we can do about it. I mean, you hear periodically, especially last year, by the way, the de-dollarization debate got another run with some of the BRICS nations talking about maybe an alternative currency. China obviously would like an alternative currency, at least to some extent. That's not realistic for now. The dollar remains the global trading currency. It's used in the settlement of commodities, used in the settlement of merchandise goods, and of course, it's a big borrowing currency for a lot of emerging economies. So there isn't an alternative right now, and that's why they complained about the pain that they feel from the Fed.
Yeah, and you do start to think about, too, global central banks, if they're all kind of doing their own thing, like that potential different policies, how that might impact the global economy as well and what it means for our global investors. Enda, great stuff, as always. Enda Curran, global economy reporter at Bloomberg News, joining us from our D.C. bureau. As we said, this story will be featured in the forthcoming issue of Bloomberg Businessweek magazine. It's going to be out later this week. You can read it now on the Bloomberg and also at Bloomberg.com/Businessweek. I called it a Bloomberg Big Take earlier. It could be. It should, it's one of those kind of stories. But it's just kind of gives us some global context in terms of where we are right now.
Yeah, exactly. And I mean, it is such a interesting story because of the pure ambition and the sweep of it. I mean, he said during his chat with us, spin the globe, and that's really what we did just in the space of that story.
All right, great stuff, folks, and you can check it out online. Hey, coming up next, we're going to talk a little bit about another big tech name in the news. Right now, though, it's off to D.C., or back to D.C., I should go, and a check on World and National News with Nancy Lyons. Nance, all yours.
Thanks, Carol. The top Democrat on the House Oversight Committee says he believes the impeachment inquiry into President Biden is over. Maryland Democrat Jamie Raskin spoke after a closed-door testimony from the president's brother, James Biden.
We have heard nothing indicating that Joe Biden had anything to do with the business ventures of Hunter Biden or James Biden.
Raskin says James Biden flatly denied that his brother had any involvement in his overseas dealings, which have come under scrutiny by House Republicans. The Justice Department recently also indicted an FBI informant, Alexander Smirnov, for making false statements about President Biden and his son Hunter. He was a key part of the GOP's allegations against the president. The pounding rain that's been drenching California is finally starting to move out, but it's left a mess to clean up. The storm is especially bad for Jacqueline Ellis, who lives in Auburn near Sacramento. Her home was knocked down by the heavy wind and rain.
I'm just trying to pick up the pieces and see what I have left.
Ellis spoke with CBS Sacramento. The National Weather Service says so far this month, the Los Angeles area has received about 10 inches of rain. Parts of the coastline and mountain areas farther north receiving more than a foot. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
section lost.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. 1 hour, 20 minutes away from the latest numbers out of NVIDIA. We've got you covered on Bloomberg Radio and television. NVIDIA shares trading lower right now ahead of the earnings report. NVIDIA down by 3.7%. Not just NVIDIA after the close of trading. We'll also be hearing from Analog Devices up 1.2% right now. Also reporting after the close of trading, Synopsys, that stock down by 1.8%. While we're talking tech, cannot ignore Palo Alto Networks, the stock plunging now by 28.3%. Our man Deep Singh will have a whole lot more on Palo Alto coming up in just a moment. Equities lower across the board with the S&P down 25, drop there of 0.5%. Dow Industrials down 166 now, down 0.4%. NASDAQ down 1.1%. 10-year 4.31% with a 2-year 4.64%. Traders keeping a lid on stocks ahead of those NVIDIA results. Also, equities under pressure as the latest Fed minutes show officials are in no rush to cut rates. Right now, we've got gold, little changed, up $1.13 the ounce to $2,025, while West Texas Intermediate crude up 1%, $77.84 a barrel. Again, ahead of earnings, NVIDIA down 3.8%. Palo Alto Networks after earnings down 28.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. Well, we are, of course, focused on what happens with NVIDIA after the close today. We'll get more on that in just a moment, but we couldn't ignore the slide that we have seen, the plunge in shares of Palo Alto Networks. Charlie was breaking it down. It's down about 28%, so pretty much at its lows today, sliding the most ever after the cybersecurity company, cut its annual revenue forecast, stoking concerns that customers are reining in spending despite an uptick in attacks. So to lay it all out for us and why we should care, back with us is Bloomberg Intelligence Senior Tech Industry Analyst Mandeep Singh. He is here in our studio. Mandeep, great to have you here. We were kind of after the close yesterday. It's like Palo Alto, we don't talk about it a lot, but here it is. Remarkably a big hit. It had been rallying this year. Cybersecurity company covers a lot. What exactly do they do? Who do they compete with it? And why should we care about what's happening with this company?
I mean, it is the largest pure play cybersecurity company. So with $8 billion in revenue run rate. And look, Microsoft is a player in cybersecurity with probably higher revenue than Palo. But security is, something that all enterprises have to buy, because the last thing you want is a cyber attack, know, and just a PR nightmare that comes with it, and the fact that your intellectual property is at stake. So that's why it's been so resilient with work from home, COVID, digital transformation, even with Gen AI. Everyone is talking about training their models with more data. Well, you need to protect your data. So I think what we heard from Palo last night was they're finding it hard to sell all the solutions they have. And the CEO mentioned there's a cybersecurity spending fatigue. Now, when you hear something like that, that's a sign of a mature market. And you don't associate that with AI or cybersecurity, at least till now. So I'm looking for more data points from pure play cloud companies like CrowdStrike and Zscaler, because these companies are growing, 30, 40%. And Palo Alto is traditionally a firewall company that is migrating to cloud. So it's not a pure play cloud company, but they had been executing very well. That's why the stock was trading at 15 times sales. So this is really the multiple getting crushed because the growth expectations have come down. And we have seen time and again, when a company trades at rich valuation, any sign of deceleration in growth will result in multiple compression.
In terms of the valuation.
Yeah, but I want to go back to this point you were making about market saturation, because when you were talking initially about the need for cybersecurity, I feel like it's a utility for a company. It's kind of like it's not optional in the same way that their electricity is not optional. So where is there the error that Palo Alto is making such that they were able to disappoint investors so keenly? I mean, is it, for example, that there's up-and-comers with new technology that they don't have?
So last quarter, they guided for the full year, and they said they're going to grow 16 to 18%. This quarter, they come out and say they will grow 10 to 11%. It's the company's guidance. We're not talking about consensus numbers here. And the reason they said they're going to the growth will decelerate is because they are discounting. So when a company talks about discounting, basically they're saying the demand is softer. And to me, we saw that with cloud optimization trend last year. Every company was looking at all their cloud spend and saying, what is it that they could cut back so that they can spend more on AI? In this case, everyone is optimizing their cybersecurity spend. They have 20, 30 vendors that they're spending on. Guess what? They're trying to optimize and figure out what is it that they should be focusing on in terms of critical spend versus what they can get rid of.
So I was thinking about this and doing some of the read-through and some of your research. So we had talked about the stock, I think, being up about 120% over the past year on bets that some of these new AI-powered products and market share gains would sustain growth. So is that now at risk, or is this just a reset, going back to this, of investor expectations and the timeline, Mandeep, of that bet?
I mean, look, Microsoft has told us they are launching a security co-pilot. So their approach is everything is tied to Gen AI. For a lot of these pure play companies like Palo Alto, it's still very early to pivot to Gen AI. But we know that's where the growth is, and that's where it gets competitive. If you're competing against Microsoft bundling everything, and look, it's still there. It's still very sticky, and it's their cloud. So you don't want to get logged into Microsoft for everything.
Right.
But I think the proposition that these companies have is you can be multi-cloud. You can use Amazon, you can use Google, and then we'll give you security that runs across clouds. So there is that aspect, but clearly Microsoft can price you out when it comes to bundling.
So when it comes to Palo Alto, what are you going to be watching for, in the current quarter, and then when they report again? What's key to hear from this company?
Yeah, so the positive data point was their RPO, which is the equivalent of backlog. So even though billings decelerate, the backlog is still over 20%. And what they're saying is they're discounting it upfront so that a lot of the large deals materialize in the subsequent quarters. Now that's still, they have to prove it to the market, because you don't want to reset expectations and do that first. And clearly, I think the expectations will be much lower going forward.
All right.
You
you want to go one
No,
more?
no, you go ahead. You go ahead.
I was going to say, we've got you, and I feel like we'd be remiss if we don't talk a little NVIDIA with you. We're all kind of agog and kind of waiting for earnings after the closing bell, but with good reason. What's top of mind for you, Mandeep, when you think about this name and when it reports today?
I mean, look, everyone expects a beat and raise. That will probably be the case. For me, the more interesting thing is, what is it that drives, the use of their chips beyond the large language models that everyone is talking about? Is it more customers? So are we talking about more companies training their own large language models? So there is the training side of Gen AI, and then there's the inferencing side. So far, NVIDIA's exposure is concentrated on the training side, training the large language models. The inferencing is the use cases where, if it's a customer agent or a deployment of the technology on your phone, on your laptop, that's where they don't have much exposure. And if they really have to dominate and maintain this kind of growth rate, you would want to see that kind of exposure materialize. So to me, their customer base is incredibly concentrated. It's all your large hyperscalers. And all of them are trying to develop their own chips. I mean, Microsoft today announced their partnership. So they are looking for alternatives to NVIDIA. And that's where, it's a matter of whether it's going to take 2 quarters, 4 quarters, or 8 quarters.
But, on your point about expanding, where they're headed, and surely all their customers see the need for that expansion as well. So surely they'll all sort of head in the same direction as soon as they're able.
I mean, with chips, and especially when you have to pay up, for buying these chips, these are supply constrained. Like with all the fab capacity that's due to come online, you have to ask yourself at some point, there will be excess supply, and that will really hurt pricing. We are nowhere close to it. I mean, I'm talking about 8 quarters out, and by that time, NVIDIA would be a $100 billion run rate company on the data center side. So clearly, I think they have room to execute, but market looks ahead. They're looking 5 years ahead.
10 seconds. So you're saying basically NVIDIA not immune to what we see in terms of semiconductor cycles?
No, I think semiconductors has always been cyclical, and this time is not different. So we will see a slowdown. The question is, will it be next 2 quarters, or it will take another 4 quarters for that to happen?
Again, just a matter of timing here. Mandeep, thank you so much. Mandeep Singh, he's our senior tech industry analyst here at Bloomberg Intelligence, a must-read when it comes to names like NVIDIA and Palo Alto. NVIDIA, by the way, down about 3.8%. This is Bloomberg Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet, the head of Boeing's 737 MAX program. Ed Clark is leaving the company after that mid-air blowout of a panel on an Alaska Airjet that led to increased scrutiny of the planemaker's most important model. Clark ending nearly 18 years at Boeing. Boeing shares right now trading lower by 0.7%. NVIDIA, the stock everybody's talking about, reports after the close of trading. The key for NVIDIA and the entire market is whether the company can meet revenue estimates and assure investors that it sees further growth in generative artificial intelligence. Right now, the stock lower ahead of earnings by 3.7%. Complete coverage on Bloomberg Television and Radio. Also today, after the close of trading, we'll be hearing from Analog Devices and Synopsys. Amazon finally joining the Dow Jones Industrial Average. Amazon finally joining the Dow Jones Industrial Average. The e-commerce giant will replace Walgreens Boots Alliance. The change will take effect prior to the open of trading on Monday, February 26. The Seattle-based company is the second largest private sector employer in the U.S., right behind Walmart. Walgreens down 3.1%, Amazon up by just about 0.3%. An Uber is replacing JetBlue in the Dow Jones Transportation Average. Uber shares today lower by 0.6%. JetBlue, though, that stock down by 4.1%. Palo Alto Networks, a stock we were just talking about, now lower by 28.7%, on track for its biggest decline in 7 years after the cybersecurity company cut its annual revenue forecast, stoking concerns that customers are reining in spending despite an uptick in cyber attacks. Again, ahead of, after earnings, we got Palo Alto Networks down 28%. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, more Business Week coming up here on radio and television with myself and Jennifer Ryan. First up, though, let's get a check on world and national news. Back to D.C. we go, and Nancy Lyons. Hey, Nance.
Thanks, Carol. President Biden is calling out Donald Trump for his response to the death of Russian opposition leader Alexei Navalny. In a video posted online today, Biden said Trump and other Republicans refused to hold Vladimir Putin responsible for Navalny's death.
Trump said Navalny's death made him realize how bad America is. He said, and I quote, "We are a nation in decline, a failing nation," end of quote. Why does Trump always blame America? Putin is responsible for Navalny's death. Why can't Trump just say that?
The president also slammed Trump over his recent comments on NATO, in which Trump suggested the U.S. might not protect NATO allies who do not spend enough on defense. We're also learning from the latest filings of the Federal Election Committee that Donald Trump's campaign spent more than it raised in January, putting more pressure on outside groups who are already footing the bill for his mounting legal woes. Trump's campaign took in $8.8 million, but doled out $11.4 million last month. A familiar voice from cable news is jumping into politics.
I'm John Avlon, and I believe the United States is the greatest democracy the world has ever known. But right now, our democracy is in danger.
The former CNN anchor posted this video on YouTube to announce he's running as a Democrat in New York's 1st Congressional District, that's Eastern Long Island seat, and it's currently held by freshman Republican Nick LaLota. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Jennifer.
All right, so appreciate it. Nancy Lyons in D.C. All right, now to our one more thing this hour. And this is a story that definitely came up on our radar. And Jennifer, this has to do with, I feel like, kind of relevant when we're so focused on NVIDIA. And this has to do with a story coming from the folks over at Goldman Sachs. And they have analyzed a bunch of hedge funds. And what they're finding is that they ended up cutting the Magnificent Seven in the last quarter in a big way. And this is when we saw a big run-up in a lot of these names.
And when we saw that big run-up, there was a lot of conversation about how heavy the weighting was in the index of the Magnificent Seven. But nevertheless, these hedge funds said, here, we're going to try to find a way to cut. And so there was an analysis of 722 hedge funds with $2.6 trillion of gross equity positions, and all 7 except Amazon saw a decrease in exposure.
Which is is pretty significant. So basically, you know, as our team writes, the change is underscoring how investors are increasingly questioning whether this group, so we're talking about Apple, Microsoft, NVIDIA, Alphabet, Amazon, Meta, and Tesla, can repeat last year's performance when the index of that stocks rose 106% versus the S&P's 24% gain. So we've talked about this, right? This this group that they, you know, over the momentum that they provide generally and how they skew what we see in the overall indexes, but how important they are to the overall run-up.
Yeah, and then some of the indicators that the analysis discovered as to, you know, sort of the enthusiasm starting to wane. A great disparity in the earnings season reporting. So Meta and Amazon beating expectations, Apple and Tesla seeing some weakness, and we'll all wait and see what NVIDIA says later today.
You mean NVIDIA is reporting today? Yeah, it is. It's a big one, but it's a good analysis and a little bit of a deeper dive into terms of what's been going. All right, folks, so that's going to do it for this hour of Bloomberg Business Week. Coming up next, for those watching on television, the close is up next. For those continuing with us on Business Week, yep, we're going to talk a little bit more about NVIDIA and their earnings after the close. We're also going to get into how President Biden's EV dreams are a nightmare for Tesla and the U.S. car industry. And then, you know, Jennifer, we talked about M&A picking up momentum, but it makes me wonder what's going on with the IPO market.
Yeah, indeed, because, you know, are companies looking to get their funds from there, or do they like the corporate bond market? There's a lot of activity there as well.
That's been on your radar in a big way, so we'll get into that as well with our market guest. All right, everybody, this is Bloomberg Business Week, and this is Bloomberg. Sitting here in our Bloomberg Interactive Broker Studio. And Jennifer, we've talked a lot about NVIDIA in the last hour, but we've got lots more to come here.
We do indeed, and we're going to get an excellent analysis not only of NVIDIA, but a lot of other stocks, a lot of other decliners today.
Yeah, there's stocks definitely to the downside, right, as we see the overall market trade moving lower here. We're also going to get into how President Biden's EV dreams are a nightmare for Tesla and the U.S. car industry. This is today's Bloomberg Big Take. It's also among the most read on the Bloomberg, so we'll get into that. We are going to take a look at the IPO market. We've talked a lot about M&A. We got, the biggest global deal yesterday, Capital One and Discover, but we're going to get into maybe what we might see in terms of momentum. I think Reddit, I read something earlier about Reddit on the terminal.
Yeah, there's a lot of interest finally in M&A, and it's driving a lot of other activity in capital markets. And so it's kind of, the enthusiasm is sort of turned.
Right, exactly. And we're going to get into it with Rachel Gehring. She is EY America's IPO leader. And then we've got the author of Never Not Working, Why the Always On Culture is Bad for Business, How to Fix It. I'm thinking maybe AI, maybe there's an NVIDIA play here, maybe AI can help out with that and make us all not feel so stressed out sometimes when it comes to work. All right, first up, a lot going on this Wednesday. Let's get a check on the top stories and a look at the trade. Here is Charlie Pellet.
Thank you very much, Carol Master. A lot going on. Yes, we got you covered. NVIDIA, that's what you need to know right now. Shares lower ahead of earnings. 58 minutes from now, we've got NVIDIA right now lower by 4%. The Dow, the S&P, NASDAQ, all under pressure. Traders keeping a lid on stocks. Right now, we have got the S&P 500 index down 21 points, drop there of 0.4%. The Dow lower by 135, down 0.3%. The NASDAQ Composite Index down 154, a drop there of 1%. Equities do remain under pressure as the latest Fed minutes show officials are in no rush to cut rates. But what about the path to rate cuts? Stephanie Roth is chief economist at Wolfe Research.
We've been consistently calling for the Fed to be cutting in June. Our base case is that remains. We think that a lot of the inflation data that we saw recently was largely seasonal, and that will reverse in the next couple of months, which will then put the Fed on path to be able to cut in June. Of course, the risks are that It has to be a little bit later, and then you run into election timing, so it gets a little bit complicated. But we very much think that the picture will look different by June.
10-year right now, 4.31%. The 2-year, 4.64%. By the way, you can hear more of the conversation with Stephanie Roth on the Surveillance podcast. You can download it wherever you get your podcasts. Spot gold up 0.1%, $2,026 the ounce, and West Texas Intermediate crude up 1.2%, $77.94 a barrel. Again, NVIDIA ahead of earnings, down now by 3.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I'm Carol Massar along with Jennifer Ryan here on Bloomberg Business Week. To be fair, we've been counting down to NVIDIA's earnings for some time now, wondering whether the AI darling that is once again the top performing name in the S&P 500 after taking that top spot last year will live up to its lofty expectations and, Jennifer, more importantly, support an upbeat sentiment to the overall equity trade. And that's one thing we're also thinking about, its impact on the broader trade here.
Yeah, I mean, there's a lot of potential for a disappointment that then disappoints the rest of the equity markets, but will investors sort of pick themselves up and then move along, you know, having some confidence in the promise of AI?
Yeah, so this is why it's so important. We want to bring in once again Bloomberg News markets reporter Abigail Doolittle. She is here in our Bloomberg Interactive Broker studio. And Abigail, we've been talking about this for some time, and the importance of NVIDIA in terms of sentiment. Goldman Sachs, I think we've all said it a million times, because they are calling NVIDIA the most important stock on planet Earth. Is that extreme, or there's some truth to that in terms of the momentum it has supplied to the overall indices?
I think that there is some truth to it. Also, the degree of the decline over the last few days. Over the last 4 days, the stock is down more than 7%, down closer to 8 to 9% even, after having a greater than 240% rally over the last year. Now it's still up more than 230%. The valuation, you could say, is stretched. But I think what's really pressuring this stock is just too far, too fast. Investors really took it up for those big gains. But when we look at what they need to produce, and we talked about this yesterday, so this company is modeled for 614% bottom line growth. This after growing 1,100% in the last quarter, and the quarter before that, 739%. On the one hand, to your point, yes, it makes the case it's possible. On the other hand, at some point, it's going to peter out. Now, they could hit that, but if they guide below the 464% that is right now modeled for the future, the next quarter, there's going to be a problem. At some point, they've just swung it out of the park in such a big way. The pressure is really on. From a technical standpoint, I am really seeing this. Investors very nervous. The near-term, the uptrend out of the year-to-date uptrend completely broken. The uptrend out of October, there's a lot of room there to meet. I believe, just based on the technicals right now, and the options are supporting that there's going to be a $200 billion swing off of this quarter after an 8% swing into it suggests sub 600.
Yeah, I guess one thing you could unpack a little bit more, if you don't mind, is the sources of potential disappointment, potentially with the revenue expectations. I mean, if that's something that we hear, what does that tell us about the rest of the market?
Well, it's really interesting. So if it turns out that it's data center disappointment or disappointment around cars or gaming, it's probably going to be more acceptable. Not probably, it will be more acceptable than if it's AI. If it is related to AI in any way, and I have a hard time believing that unless they absolutely cannot talk about that they wouldn't talk about that, because that's the kind of thing that could create I don't mean to be dramatic here, but it would at least create a mini crash from the standpoint that AI is really what's floated these numbers up to such a degree. They have such nice diversification, but if all of a sudden AI is no longer one of the foundations, I think that you're going to see a certain type of investor get out. So that would cause the stock to really drop.
Yeah, and you might sort of see, I guess, some more diversification in the Magnificent Seven. This is about the story that we were just talking about hedge funds pulling back from that group of shares.
Well, I think that the negative outcome, and to what degree we're seeing it today, I have so many stocks on my screen, so I'm trying to find
you wonder how much it's down?
Actually, the other Magnificent Seven. They're like completely lost. We'll put it this way. The NASDAQ 100 over the last 3 days is down 3%, the worst stretch since the beginning of January. So the sentiment that the idea that the AI hype may be coming in at all, and we don't know that yet. We have to wait until after 4 o'clock. But if that happens, each of these companies is in that bucket in some way. Just the sentiment of it, it just, this is a darling. You have a darling fall, that's going to hurt the other ones. It's not as though investors are going to reach to scoop them up. Now, and it's an interesting thing because if you use that analogy of a good block or a bad block, the best house. NVIDIA's the best house. It's a good block, but all of a sudden, if NVIDIA, it needs to have its windows cleaned, what does that make Apple and Microsoft look like? I don't think you're going to see money rushing into those names. I think you're going to see trimming across the board, possibly money going onto the sidelines, because not only do we have this NVIDIA situation, we have the Fed right now basically saying the minutes just came out. Most officials noted risks of cutting too quickly. So that confirms the idea that we may not be cutting until July. Maybe Larry Summers' idea that it's going to be a hike. So when you have, that's the real concern for the market. NVIDIA is a big deal. NVIDIA is a sentiment.
That's a really good point.
And it will, as one of the biggest weightings on the S&P 500, the NASDAQ, it'll have a problem. But when you pair that with this macro situation where all of a sudden people thought more liquidity was coming into the market, not so fast. It's not coming in for at least, another 4, 5, 6 months. That creates a falling tide with a boat that appears to be sinking right now. It's not great.
I'm going to say Alphabet's up about 0.6%. Apple's down about 0.3%. Microsoft's down about 1%. Meta is down about 1.5%.
So kind of a mixed bag there. And it's interesting because Alphabet last week was down about 5%. Some of it having to do with AI, the idea that Microsoft in their chat feature or in their open AI was going to put in a search feature. So it's sort of give and take with all of these names. But I think that, I don't think it's going to create a huge difference if NVIDIA, and if NVIDIA reports to the upside, the money's going to go to NVIDIA. It will help those other stocks, but it's going to help NVIDIA much more than a fall to the downside will hurt.
That's what I wanted to ask you. As soon as it reports, I mean, obviously we're all going to look at the aftermarket, but I'm curious about you who looks at levels and trend lines being taken out. What else will you be looking at in terms of the significance to the upside or to the downside based on what we get from NVIDIA?
So on NVIDIA or the NASDAQ 100?
Or just, even related.
Well, NVIDIA, honestly, it's at a very precarious point. It literally looks like it's going to break down to it looks like it could potentially, it may not, this is just my speculation, but it is guided by a pretty strong technical chart, which is of price. It looks like it's going to pull a Palo Alto Networks. Palo Alto Networks was down 3 or 4 days into the report. When a stock trades poorly into a report, typically there's a reason for it, and now down 27%. It looks like it's going to drop down to about 564. So if I put that into a percentage very quickly on the chart, that's it's actually not as bad as Palo Alto Networks. It's probably closer to like 15 to 20% drop, but that would be significant. That would be that $200 billion drop that options are talking about. If that happens, that's going to have a negative sway, clearly, I believe, on the NASDAQ 100. And if I pull that up super quick, the thing that we've been talking about in recent weeks is the idea that these all-time record highs that we've had recently for these indexes, over the all year, it's been made on less bullish momentum than the highs last year. That tells you weekends have been buying, and weekends will fold quicker too.
All right, great perspective. We like context, we like size and scope here, and that's exactly what we get from Abigail. Abigail, thank you so much. Bloomberg News markets reporter Abigail Doolittle joining us here in studio. This is Bloomberg.
You're welcome to my nightmare.
All right, everybody. Now to a story that our Bloomberg editorial team deemed a story that everyone should really have on their radar. It is called the Bloomberg Big Take today. It's about the goal of the U.S., a plan of President Biden's to create an alternative electric vehicle supply network around the U.S. and its free trade partners, and really to cut China's influence, particularly over the global metals market. Turns out, like most things, it is not easy. It's also making life more difficult for U.S. car makers who are trying to compete in that global EV race. So let's get to it. It's also a most read story on the Bloomberg. We welcome in Bloomberg News metals and mining heavy machinery reporter Joe Doe. He's here in our Interactive Brokers studio. Great story. Well done. Tell us what's going on here.
Well, what's been going on is a year and a half after the IRA passed the Inflation Reduction Act, which more people remember is the big climate legislation that Biden got passed through with the help of Joe Manchin. Well, things are getting kind of dicey now, right? So the whole idea was you pass this legislation, you encourage private money, private companies, investors to apply into this space, right? Electric vehicles. It's not a well-established industry here in the United States. On the whole, sure, we know Tesla, but the full supply chain, it's not super well established, especially when you consider China's the dominant player. But you bring in this government money, talking billions with a B, that gives reason for private money to come in and say, we've got a backstop. And now, as we're finally getting the guidelines as to what qualifies for tax breaks with electric vehicles, Not everything seems as obvious, right? So suddenly Tesla and GM and Ford are having to backtrack and say, well, maybe, dear consumer, you will not get the full tax credit. And that's largely coming back all the way to the raw materials, cobalt and lithium and all the others that go into the battery.
And so the point here, according to your story, which is absolutely fascinating, the graphics are great as well.
It's very interactive, so go online to read it.
Exactly. But the point is, China has such a dominance in the production of some of these minerals, but then what this runs up against is the Biden administration's insistence, which didn't come out straight away from what I understand.
That's right.
This has got there's an anti-China element to the batteries that cars can be using, where they can source their raw materials, and this is sort of upending the supplies, and that's, I guess, what's making life hard for the automakers.
Yeah, and credit to our graphics team; they're phenomenal at this work. But exactly, and it's been a discussion going hard probably since the summer. It became obvious to the automotive industry, but also to the raw material suppliers and the labor unions that the key details on who would get a tax break would be coming out. We didn't get them until December, and when they came out, let's just put it this way, everybody was still wondering what the heck was going on. Initially, Tesla was saying, we think everything is fine, and then they came out just a short few, I think, weeks later and said, well, actually, some of our cars don't completely qualify. The discussions are still ongoing, and we don't have this bit on our story, but like this week, we're gonna hear from a number of different players on both sides of this situation, speaking to the IRS, because the IRS is who, determines all the tax situation. Like, here is why this works or why these guidelines don't work. The automotive companies are the head honchos here, right? They have the big industry, and they're saying to be competitive with China-produced automobiles and batteries, we have to be cost competitive. If you are forcing us to put 50% of our sourced cobalt and lithium in the batteries from U.S. or free trade agreement countries, in other words, allies of the U.S., it's going to cost us way more, and we're not going to be competitive anymore.
So is the decision that the Biden administration is now facing what's more important to them, that they develop this supply chain? Because the whole rationale is to reduce carbon emissions.
Right.
Is that more important, or is it more important that they put a stop on imports of these Chinese products?
They'll tell you it's both. But this is really the key question, I think, going on within Washington, within the administration, is ultimately where do they fall? It is an election year, which let's remember, right? And so Biden and others, they've got to play their cards right. But I think if we're looking a year, 2 years out, where does everything fall? I think it's still unclear. Listen, the domestic miners and the labor unions have an argument. Hey, if you really want to get a domestic supply chain here, you have to give some runway for us to build this out. The car makers are equally okay. It's like, hey, we can't make a Ford F-150 electric competitive with a Chinese equivalent if we're not at the same cost structure. And
but that's the difficulty, right? In the President Biden's Inflation Reduction Act, I mean, it was required that in order, you had to make sure that a certain amount of components were either U.S. made or with, sanctioned partners, right? And that's what they're coming up against. At the same time, then you've got to, we don't necessarily have what we need here domestically or among those partners for the U.S. automakers to be maybe globally competitive in the EV race. That's kind of what it comes down to.
That's really what it comes down to. Exactly. And I think that's really the genesis of how we get to this article, right? It is explaining, we've all heard these different things flying around for 2-3 years now, and now the rubber's hitting the road. And it's really messy.
Joe, when you look at it, though, and I've thought about this a lot because we've done a lot of stories here at Bloomberg about the amount of these core resources or minerals that are needed to do all of these batteries for these, that China's got really a great stronghold on them. Ultimately, can the U.S. build it out to support their own domestic EV industry?
They probably can, but there will probably have to be some concessions. I don't know what those look like, but I can tell you a conversation that I had many, many months ago with the now deceased president of the United Steelworkers said, we're realistic. We understand that you can't just suddenly have all the cobalt and all the lithium made in the United States. However, we need to establish some way for us to do part of that here while slowly setting in the guidelines that allow for us to, yeah, sure, we may have to take it from certain actors abroad, but eventually we'll have enough runway where we've built out supply chain here, the same way that we're seeing with semiconductors, and eventually we've weaned ourselves off being completely reliant on actors like China, who are, basically the only place you can go for rare earth element production or cobalt refining.
So I guess, we don't have a ton of time left, but IRA, very much a Biden policy. If we get a change in administration at the end of this year, what does that do to the calculus for consumers and for automakers on electric vehicles?
Just about 25 seconds.
We will see. I've had a lot of discussions with people on both sides of the aisle. It's definitely a conversation, but it is not clear that former President Trump would necessarily kill it, nor is it clear that he would be totally happy with it.
Like we said, none of this is really easy, but we're getting some more information about what it's going to take. Joe Doe, great story. As we said, among the most read, it is the Bloomberg Big Take here on this Wednesday. Bloomberg News, metals and mining, heavy machinery reporter Joe Doe here in our studio. You can read it too on the Bloomberg and at Bloomberg.com.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Lows of the day right now. We got 38 minutes to go ahead of the closing bell. S&P 500 index down 28, a drop right now of 0.6%. Dow Industrials down 218, decline there of 0.6%, while NASDAQ is down 171 points for the NASDAQ Composite Index. That is a drop right now of 1.1%. 10-year 4.31%, the 2-year 4.65%. Spot gold is trading higher, little change, flat on the day, up 25 cents, 2,024 the ounce, while West Texas Intermediate crude up 1%, 77.82 for a barrel of WTI. NVIDIA, after the bell, the poster child for the AI story, but what about the broader market implications? Monica DeCenzo is head of global investment opportunities at JP Morgan Chase Bank.
Many clients I work with still don't have enough general risk on. And so they're getting a little caught up in, do I want to own more NVIDIA or not? I'd argue you probably want more risk across the board. You probably need to own more fixed income. You probably need to own more broad equities. I still see way too much cash on the sidelines. And to me, that's a bigger risk than, for many people I work with, how much NVIDIA they own.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Now, ahead of the earnings report coming shortly after the close of trading, NVIDIA shares, they're down now by 4%. Recapping, stocks lower, S&P 500 index down now by 27, drop there of 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week. Carol Massar, along with Jennifer Ryan. Tim, as you know, is out today. Well, Intel backed Astera filed for an initial public offering today on the NASDAQ. Wall Street Journal noting that Reddit expected to make its IPO filing public this month and reserve shares for 75,000 of its users. And meantime, earlier this year, our Bailey Lipschultz noting a jump in biotech IPO listings. I do feel like, Jennifer, that IPO, obviously important. It's a great indicator of kind of health in the market or the willingness, right, to bring new issues. But my attention has been a lot more on like M&A. We've seen a lot of M&A deals this year.
Exactly.
Another good indicator.
It is a very good indicator, and it makes a very nice change from last year when that was really in the doldrums, and that has ripple effects across the whole economy and all the markets.
All right, so watching M&A, but we did also, though, want to dig a little bit more into what's going on with those new issues. So we've got a great voice on that, and back with us is Rachel Gehring, EY America's IPO leader. She joins us from Nashville, Tennessee. Rachel, great to have you here with Jennifer and myself. So how would you describe the IPO market today? What are you hearing maybe from some of your clients?
Sure. Thank you for having me. Sitting here today, I look at the IPO market and definitely feeling and sensing positive signs of a continued steady recovery in the IPO market, similar to coming out of 2023. So not a spike in a resurgence by any means, but positive signs, steady recovery. 24 IPOs so far in 2024. 5 of those raising, well over, over 500 million in proceeds, 2 over $1 billion. So strong results, cross-sector representation, larger deals. 11 of those 24 all raising over 100 million in proceeds. So positive to see some stronger deals, larger deals coming to market. Those are positive signs for 2024 so far.
Can you talk a little bit more about how the Fed is affecting the environment? Because we've been talking an awful lot today about the Fed minutes, and we all remember how traders have really been wrong-footed with the Fed, with their expectations on how quickly the Fed's going to cut rates. So how is this recovery of the IPO market sort of interacting with that dynamic?
It's certainly impacting and back to kind of just a steady recovery because we are still in that high interest rate environment. What's helpful is we're not anticipating nor expect any rate increases. Rates are going to hold steady, hopefully start to come down, whether it's late spring, early summer is still the question of when we would start to see those rates come down for 2024 and into 2025. But the economic, backdrop is showing signs of improvement, not only with interest rates, but with, labor markets, supply chain, tensions are easing and inflation is easing. So those are positive signs that will help fuel the IPO market, but we need to see those signals continue. in a steady state.
You sound like a Fed member, Rachel, to be honest with you. Because it does feel like there are a few different scenarios that could certainly play out here in 2024. Are you more cautious than not cautious, maybe compared with the last, 6 months or so?
I'm optimistic, quite honestly. Not to say that there's not challenges companies are continuing to navigate. Cost is one. Whether it's consumers, the price of goods, price of services, cost of capital continue to be high compared to your pre-pandemic levels. So it's a challenging environment to navigate, no doubt, but starting to ease and improve. I'm optimistic. When it comes to IPOs, the key is not only the economic backdrop and how that will sustain to bring companies to market, but the post-IPO performance of those companies needs to hit to maintain the momentum. That's absolutely critical. So how companies prepare in advance of the IPO, that time of preparation is really critical because we need them to perform well and strong post-IPO.
You mentioned at the start of it, the conversation, 24 IPOs so far in 2024, cross-section or across a bunch of different sectors. Is that true? Talk to us, we talk a lot about AI. I'm curious if you're seeing a lot of IPO activity with that. The Intel-backed Astera has an IPO, certainly component to it. And they talked about an IPO on the NASDAQ. That came across the Bloomberg today. Biotech, where are you seeing, though, more momentum than maybe the rest?
Sure. Yeah. So biotech, certainly a sector that's coming out strong so far in 2024. 10 IPOs, $2 billion in proceeds raised. So really strong results, particularly in biotech. Then we're seeing kind of onesie-twosies across all other sectors, consumer, one tech IPO so far. The biotech really is being fueled by interest in big pharma. And the M&A activity that we're starting to see, that's improving valuations. So that's driving some momentum around IPOs and also follow-on activity in the biotech sector. So that's really encouraging to see, anticipate that to continue. When I think about AI, huge topic, everyone is talking about it. I think about it in two buckets. One, the pure play AI companies, we're going to see those come to market, kind of onesie-twosies, in my opinion, over the coming months and so forth, but probably not in droves, largely because, one, the technology is still emerging and evolving, and two, in the private sector, there's still a lot of interest in investing in that direction, particularly from venture capital. So these companies are getting funded to continue working through the technology and so forth and remaining private. But then alternatively, there's everyone else. How are companies leveraging AI in their existing business, whether it's product, services, driving customer satisfaction, driving efficiency, and reducing costs? Companies are still really looking to how they're going to employ AI within their business model. We're seeing that play out in equity stories. The tension that's going to be there is investors and stakeholders saying, "Show me proof." Right? Not just talk about it, but show me the results of AI and how that's really impacting the business overall. So that'll be something companies really have to pay close attention to as they come to market with an AI story.
If you could elaborate a little bit on that. I mean, how happy are investors, do you think, at this point with the real cash value of AI for companies? Is there patience about to get tested a little bit, and do they have a lot of patience?
Yeah. Right. I think we're going to start seeing, continued pressure testing around that, and healthy skepticism coming from investors and broader stakeholders. It's not just about talking about how companies are leveraging AI, but showing me the results of that use and also demonstrating a responsible use around AI as well.
Is there a private equity component to this too? I mean, we've got a couple of stories about private equity funds that maybe have been waiting for a much more friendly market to maybe either sell or spin out some of their investments. I'm just curious if you have a perspective on that as well.
We definitely know there's pent-up demand, particularly from a PE perspective. The deal volumes have been low, both on M&A front and an IPO front. So starting to see that kind of unlock, through both M&A activity and anticipated, IPO activity throughout 2024 is what's fueling, some of my optimism of what we may expect to see throughout the rest of this year, and also beyond 2024 into 2025.
Is there one big deal you're kind of waiting? I feel like whenever we talk about the IPO market, Jennifer, right, there's always a name or two in the newsroom that we were like hyped about. And I'm just wondering, is there anything, Rachel, on your radar that is that name? Like I talked about Reddit, Journal has some stuff on that today, but I don't know if that's it or is it something else?
I can't comment to any particular company. What I am excited about, though, is when I look at the pipeline, shadow pipeline, and then anecdotally, just the companies that we're working with, we're speaking with, a lot of interest around going public. So the interest, the desire is still there. What companies are doing today to prepare for a future public listing is very encouraging. And we're seeing this across multiple sectors, not dominated only by one. Certainly, hopefully the tech sector will start to kind of come back to its historical norms, but it's going to take some time to get there through just navigating kind of the economic and geopolitical conditions that all companies are experiencing right now.
All right, we're going to leave it on that note. Rachel, thank you so much. Really appreciate it. Rachel Gehring, IPO leader, EY America, is joining us out there in Nashville, Tennessee. It has been kind of a quiet market, Jennifer, right, for a while.
Yeah, it's been quiet, but then we get some very interesting deals pop up. Capital One comes to mind.
The M&A activity has been pretty astonishing, especially if you think about the energy space and some other places, right?
Exactly.
All right, folks, that we are keeping on our radar, and also, of course, NVIDIA after the close. Right now, though, on our radar is World and National News. Off to D.C. and Nancy Lyons. Hi, Nance.
Hey, Carol. James Biden says his brother, President Biden, never had any involvement in his business dealings or the dealings of other family members. He appeared today for a private interview by House Republicans who are conducting an impeachment inquiry into President Biden. Former President Donald Trump is finally saying a little more about the death of Russian opposition leader Alexei Navalny. During a Fox News town hall on domestic and foreign policy challenges, he mentioned he thought Navalny was brave.
Frankly, probably would have been a lot better off staying away and talking from outside of the country as opposed to having to go back in, because people thought that could happen, and it did happen, and it's a horrible thing.
Trump was widely criticized for omitting sympathy for Navalny in an earlier Truth Social post. The Supreme Court today heard emergency relief arguments on the Good Neighbor Plan, an EPA rule under the Clean Air Act, which requires upwind states to limit air pollution that travels across state lines. We get more from Bloomberg's Irv Chapman.
Ohio's lawyer Mathura Sridharan argued for a dozen Midwestern states.
We are spending immense sums, both the states as well as our industries, and on top of that, facing the threat of power shortages and heating shortages.
New York's lawyer Judith Vale represented the eastern states.
The harms will flow to both the residents of downwind states, who will experience health dangers, and to downwind industry, which pays increased costs to compensate for upwind pollution.
Industries joining in the effort to block the rules include U.S. Steel, Kinder Morgan, and the American Forest and Paper Association. In Washington, Irv Chapman, Bloomberg Radio.
The American Lung Association is out with a report saying the transition to electric vehicles and clean power could save infants' lives and help millions of children breathe easier. The association was looking at children's health if all new cars were zero emission by 2035. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks well off session lows. The Dow, the S&P, NASDAQ all remain in the red ahead of NVIDIA earnings. But look at the S&P, well off session lows. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shaw. That's right. U.S. stocks still in the red as everyone awaits the NVIDIA earnings. Dow's currently down 66 points, S&P's dropped 5, and NASDAQ is lower by 86. The U.S. 10-year yield at 4.32%. Gold is little changed, oil trading in the green, but Bitcoin is lower by 1.7%. Among the main 11 S&P sectors, leaders were energy and utilities. Tech and telecom were under pressure, and leaders to the upside in the Dow Inc. and Nike, while Walgreens and Intel led to the downside. After earnings, Palo Alto Networks plunged 29%. That's the most ever, while Toll Brothers broke out to a record high. And wrapping things up, NVIDIA does report after the bell. EPS estimates are for $4.60 on revenues of $20.41 billion. Live from the First Word Breaking News Desk, I'm Bill Maloney. Charlie?
And we thank you very much, Bill Maloney. We got you covered on NVIDIA. And to hear live breaking news over your Bloomberg, type SQUAWK, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 17 and a half minutes left in today's trading session. Carol Massar along with Jennifer Ryan in for Tim Stenovic on this Wednesday. It's a Fed Wednesday. We got the FOMC minutes at the top of our broadcast at 2 p.m. And now we're waiting for NVIDIA earnings, which are going to be out in about an hour from now, less than 60 minutes. Equity markets, Charlie breaking it down, Jennifer. We're bouncing off our lows of this session when it comes to the equity trade.
Yeah, and it's interesting because there's been so much talk about the Magnificent Seven and how important they are for the equity market, and now there's the darling of them all, NVIDIA, is about to just decide whether.
No pressure.
Yeah, there's no pressure at all. It's just about to decide for all of us whether or not we've been totally irrational for the past 4 days thinking about it.
All right, well, let's see what our next guest has to do. Our Drive to the Close guest on this Wednesday, Lisa Erickson, Senior Vice President and Head of the Public Markets Group over at U.S. Bank Wealth Management, joining us from Minneapolis, Minnesota. Lisa, good to have you here with Jennifer and myself. First of all, we are a little obsessed with NVIDIA, but we're kind of at that moment in time where we're in between Fed meetings and a lot of different things at the end of earnings cycle. How are you thinking about it with your team, the results that we get from NVIDIA, and how it could possibly impact market sentiment?
Well, certainly what's going on with technology is a big story on a number of different fronts, and it really has to do with the fact that both from a performance standpoint as well as a contribution to earnings standpoint, the tech sector in general really has been a driver, not only in 2023, but obviously year to date. And so I think as we look at the remaining earnings that we had, including some of these key bellwethers in the tech sector, it really does matter what they're going to be able to produce, because certainly what we've seen in earnings season so far is while we've had some fairly good numbers from the sector, the reaction has not always been even, and simply because the margin for error is low, given that they have had really such great performance.
I just want to point out, I'm looking at charts of the S&P, the Dow, and the NASDAQ. I'm not quite sure what has happened, but it's a straight line up. We're not in the green yet, but we're not at our best levels of the session, although I think we are on the S&P 500 now, still down about 3 points, but remarkably different from where we were certainly at the top of our broadcast. So it's interesting to see some buying as we are, 16 minutes away from the close.
I mean, maybe there's a sense there's an opportunity, but I mean,
Yeah.
Lisa, we would love to get your perspective on this. I mean, you've got all this focus on what's happening after the bell, but what's your recommendation for taking the step back, and what's the bigger picture? Have equity markets overall come too far too fast, or is there room for a little bit more sensibility here?
We're really fairly balanced on the U.S. equity market right now, and there's really a confluence of factors that's leading to that more neutral position. And the reason why is because we have on the positive side really an economy that's been very resilient on the back of a strong consumer and a good labor market. And then also some hopes that, again, we're going to get some easing in that monetary cycle and get some relief in terms of the tightening conditions that we've seen from interest rates. However, on the other hand, we've had quite a bit of run up. And so that does produce some cautiousness. And when you actually look at the overall growth levels, what you see is that growth certainly has been better than expected, but at absolutely low levels. And, you know, when you have really tighter interest rates, as well as the fact that growth has been on a lower trajectory, that really usually isn't a good recipe for stocks. And so overall, we really advise our clients right now to be staying at usually where their strategic weights would be on U.S. equities, as opposed to really trying to be heroic and highly overweighting or underweighting them.
So could you build a little bit more on that? Where are you recommending that they overweight?
Well, right now, we would say across the major asset classes, equities, fixed income, and real assets, we would again stay at whatever are your typical long-term targets. We do see some opportunities, however, within asset classes. So a great example is within the fixed income area, for example. There are specific sectors such as non-agency residential mortgages that have some extra carry and that are supported by really nice fundamentals on the housing market, where again, credit remains fairly solid with those underlying borrowers. And so there are some areas to skew to certain sectors at this time.
You know, it's interesting that you bring up the real estate market, because we've spoken an awful lot, not only on this program, but on other programs. We've written a lot at Bloomberg News about the risks in the commercial real estate property market. And, you know, for yourself, do you feel like it's something that it's difficult to manage at this point? Because, you know, we have New York Bank Corp created some problems earlier this year. You know, it's very, like, there's a lot of worry about where that sector's headed. I mean, what's your advice to your clients?
Commercial real estate certainly is an area that we're keeping a very close eye on. Right now, our base position is that we believe that that market can continue to work itself out over time, as we've seen happening so far. Again, real estate is a very localized market with a number of different sectors, and because this has been a problem that has been out in the news for some time, what we see is individual borrowers and lenders really working through that on a case-by-case basis throughout different areas of the nation. However, again, there is a wall of maturities coming forward. And so while, again, it's been a fairly orderly process so far, and our expectations as a base case is that that can continue, we want to continue to look for signs of stress that, again, could spread further.
All right, so balanced view on the equity market. I am curious, what would make you say, okay, that's not the right strategy? What would happen, whether it be at Fed policy or something else that happens that makes you say we're going to have to think about where we really want to be exposed and where we don't want to be exposed?
Well, certainly our focus is really on some of that underlying support for the now okay fundamentals that we see. And the first stop, of course, is the consumer. So we continue to watch, again, consumer behavior, their ability to spend, and how that strength is continuing to play out as really one of our key ongoing barometers. But in addition to that, to your point, policy is going to be key. And certainly if you look at where it's been heading with the Fed, even the Fed does not exactly know when they're going to be able to move from this more pausing phase that they're in right now to more of a pivot phase. And so, again, to the extent that we get some flare-ups in inflation from either consumer or corporate behavior or just shock events, again, that could delay some of the relief that may come on the monetary policy front.
Real quick, we don't have a lot of time left, just about a minute. I mean, can you talk a little bit about the very strong dollar? Because that's been really, really quite intense. And so I wonder, you know, are you worried about them having some deleterious effects on investments that you're recommending, or are you hoping that, you know, it'll continue?
More like 25 seconds.
Certainly, the dollar has been a key concern. Thus far, again, companies have been very resilient, but again, to your point, it's something we want to continue to monitor. However, with, again, the Fed hopefully moving to easing, it may not be as much of an issue in the future.
All right, great stuff. Covered a lot of ground. Lisa, thank you so much. Lisa Erickson, she's Senior Vice President and Head of the Public Markets Group over at U.S. Bank Wealth Management, joining us from Minneapolis, Minnesota. Folks, just about 10 minutes away from the closing bell, about a half an hour, give or take, unless NVIDIA surprises us, till we get NVIDIA's results. That stock's still under pressure, down about 3%, but off its highs. And we're seeing some buying into the close here. This is Bloomberg Business Week.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 7 minutes to go until we get the latest earnings out of NVIDIA. Not just NVIDIA after the bell, also going to be hearing from Analog Devices and Synopsys. And stocks right now are pushing higher ahead of the report. The S&P going from negative to positive, barely up by less than 1 point. There are questions over whether NVIDIA can deliver another blockbuster earnings beat, with investors questioning the durability of the frenzy over artificial intelligence. Of course, NVIDIA at the heart of the AI revolution. Cameron Dawson is Chief Investment Officer at New Edge Wealth.
It's certainly important in the context of sentiment, because we do know that it has enlivened a great deal of bullish sentiment. You look at flows into tech, and they've been absolutely extraordinary from a sector basis. Every other sector has had either flat to outflows, whereas tech has gone through the roof. It's also very expensive, so it means there's a high bar for upside surprises.
And, of course, complete coverage when we get those NVIDIA numbers after the close of trading. NVIDIA right now is trading lower ahead of the report. Right now, NVIDIA is down 2.7%. The head of Boeing's 737 MAX program, Ed Clark, is leaving the company after that mid-air blowout on a panel on an Alaska Airlines jet that led to scrutiny of the plane maker's most important model. Clark ends nearly 18 years at Boeing. Boeing shares down 0.9%. Amazon finally joining the Dow Jones Industrial Average. The e-commerce giant will be replacing Walgreens Boots Alliance. That change will go into effect prior to the open of trading on Monday, February 26. Amazon up today by 0.9%. Walgreens Boots Alliance down 2.6%. Those are our top company stories, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Master along with Jennifer Ryan. She is in for Tim on this Wednesday. Well, February, as you know, is Black History Month. And every day this month, we are celebrating significant moments in U.S. Black history. Now with your installment for February, not February 16th, it's February 21st. Let's get to Bloomberg's Justin Milliner.
Carol, thank you very much. On this day in Black history in 1965, Malcolm X, one of the most well-known and passionate faces of the civil rights movement, was assassinated. He was born Malcolm Little in 1925 in Nebraska. As a young man, Malcolm moved up north, spending time in Harlem and in Boston, where he was eventually arrested after committing a series of burglaries. While he was incarcerated, that's when he first got introduced to the Nation of Islam, a group he would advocate for most of the rest of his life, becoming one of the most prominent members of the movement. While he's remembered for being an important activist in the civil rights era, his life was not without controversy. Malcolm X's sometimes extreme viewpoints put him at odds with many other communities, including with other civil rights advocates like Martin Luther King. All told, Malcolm X's legacy is that of Black empowerment. His influence gave way to the Black Power and Black Arts movements, which took place following his passing, both of which conveyed a message of Black pride. And that is today in Black history. Back to you, Carol and Jen.
All right, so appreciate that. Bloomberg's Justin Milliner. All right, well, listen, folks, we're just a few minutes away, right, Jennifer, from the closing bell. What's interesting, I've got, my screen up here, and we have seen buying here in the last half hour. We are now up about 6 points on the S&P 500. The Dow also in positive territory, up about 41, and the NASDAQ has pared its losses. It is still down about 52, 53 points, but we look like we are at the best levels of the session, so interesting trade. It makes me wonder what is somebody thinking at this point?
Exactly. I mean, let it be said, we've still got 3 minutes to go until the close, so anything could happen.
Fair enough. I'm looking at NVIDIA, which was down 4.6% at its lows today. Still a decline of about 3% here, but this is ahead, of course, its earnings, which we will be breaking down, and it will be a focus to see what they do and what impact it has on the overall NASDAQ futures in the aftermarket.
Exactly. And then, the thing that'll also be interesting is to see what the impact is from NVIDIA, either good or bad. If it's an upside surprise, what does that mean for everyone that's in the same boat?
Can we see triple digit growth, I should say, in revenues? They've done it for 2 quarters. Will this be a third? All right, folks, over to our TV colleagues. That's because Beyond the Bell, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Gina Martin-Adams. We're counting you down to the closing bell. You're here to help take us beyond the bell. It's a global simulcast with our friends Carol Masser, Jennifer Ryan in today for Tim Stenivek. Welcome to our audiences across our Bloomberg television, radio, and originals platforms, as well as our partnership with YouTube. A consequential day potentially here, Carol Masser, a market that has rallied hard to start the year, and a lot of that was on the back of NVIDIA.
Yeah, absolutely. Any kind of surprise to the upside or downside could really and is likely to impact market sentiment. Having said that, I heard you a little bit kind of getting into the setup here. It's been interesting to watch in the last half an hour the buying coming into this market.
Not only the buying, but also the big just shift in sentiment, because I mean it's just been down so heavily all day that it's interesting to see anyone having a positive change at all. So I'm very interested to see what the views are there.
Well, and let's just think about things beyond tech, right? I think that when we get so captivated on what's gone on with NVIDIA, what's gone on with Palo Alto, it's been all AI. But frankly, when you look beyond what's going on in tech, there's generally some pretty positive news coming out of companies. And I think that that might allow for some stability to emerge overall in the equity market.
Yeah, and we should point out, despite the fact that it's a down day, the majority of the S&P sectors have been in the green for a good portion of the day, but it's just not, of course, the type of stocks that most people turn to. It's energies, utilities, real estate. Meanwhile, tech remains the laggard here, but of course that could change in a pretty dramatic way in the next few minutes. We are expecting to get results out of NVIDIA, as well as quite a few other companies outside of the tech space. That includes names like Etsy, names like Five9, as well as two big EV players, Lucid and Rivian. We walk through the numbers with green on the screen for two of the indices. The Dow average up about 0.1% here on the day, up about 40 points as we wait for these numbers to settle. The S&P 500 looks like it's going to close higher by about 6 points, or about 0.1%. The Nasdaq Composite, though, has been in the red all day, and that's where it's going to finish, down 0.3% here on the day. And let's check in on the Russell 2000. That is your relative laggard on the day, down about 9 points, or about 0.5%.
All right, back to the big caps I go here in the S&P 500 specifically. As you said, Romaine, a lot of the industry groups in the S&P 500 were in the green for most of the day. If I look at the mix here, 327 names in the S&P 500 gaining ground today, 174 losing ground, 2, Gina, unchanged.
Yeah, and I think the sector performance is really interesting today as well. We got actually 65% of stocks closing higher on the day. This is not a horrible day in the equity market by any stretch of the imagination. Most sectors higher, tech, of course, the only laggard. Energy, 100% of energy stocks up on the day. So clearly something going on in the commodity space. Utilities and real estate up as well, which would suggest maybe the read-through from the market here is that those interest rate sensitive sectors are about to get a little bit of a benefit with a Fed ease coming sometime in the next 6 months. So maybe there was enough in those minutes, or there's enough in the news coming out of tech to suggest that the pressure on inflation may not be as horrible as we were thinking over the course of the last week.
And I don't think there was anything in the Fed minutes, right, about an increase, right? So that maybe was some sigh of relief here. Hey, let's get to some, as we wait for earnings, some of the individual gainers, if I may. Toll Brothers on that list, finishing with about a 4% gain off its highs, at its highs up almost 8%, but it did rally to a record. The luxury home builder lifted its outlook for home deliveries in its fiscal year, also said it's optimistic about its prospects for a key selling season. Exelon, another earnings season, the electricity utility among the top gainers in both the S&P 500 and NASDAQ 100. Fourth quarter adjusted operating EPS, operating income all beats. Company raised its 2024 adjusted operating EPS, also raised its quarterly dividend. So some big moves in that name as well. Exelon, just bringing it up here, it was up about 4.25%. And then Garmin, another outperformer, a gain of nearly 9% just off its highs. Another top gainer in the S&P 500. We got earnings this morning. Fourth quarter revenue and pro forma EPS were beats. 2024 gross margin in line with street estimates. It authorized a $300 million buyback, and the stock, I believe, at its highest, it's about December of 2021.
And can I just add, too, I mean, just to Gina's point, too, about energy stocks, I mean, when you saw EQT, Range Resources, Chesapeake, those really led the charge when you go across the tape, and that seemed to be on the back of those comments, Carol and Jen, about Chesapeake actually curtailing production this year, which could potentially, I guess, benefit them on profitability.
Right, benefit some of the other ones, right? Yeah.
Okay, so now here I am with the decliners for today. I'm going to start off with Manchester United. Their shares dropped, they were down, let me just get myself to the right screen here. Their shares were down about 8% by the end of the day today. And that's as traders who had bet on Jim Ratcliffe's $1.3 billion purchase of a stake in the football club started to unwind their positions. Next up, I'm going to look at Palo Alto. That was a pretty big decliner today, falling the most on record, down a little bit more than 28%. And what happened was the company had cut its annual revenue forecast, and that stoked concerns that customers were reining in spending despite an uptick in cyber attacks. And lastly here, Walgreen Boots Alliance, which has already been mentioned today, down 2.5%. That was after the e-commerce giant is going to get replaced. Sorry, I'm getting it all backwards today.
Yeah.
Walgreen Boots Alliance is getting replaced by Amazon.com in the Dow Jones Industrial Average, and that change is going to go into effect on the open of trading on Monday, February 26th.
Yeah, a big move there. Remember, there was so much talk about, well, why Amazon wasn't in the Dow. Of course, they did the stock split, and now they get the reward here. Let's take a quick look at what's going on in the yield space, where yields continue to do what yields have done, which is oscillate back and forth. One day they're up, the next day they're down. Today, pretty much up across the board here. About 4 basis points on the 2-year yield, and similar moves on the other parts of the yield curve. So almost not quite a full parallel shift, but similar parallel shift, and it kind of continues the trend I think we've seen, guys, over the last couple of weeks, where people are really starting to buy into what the Fed has really been trying to tell them now for months, which is that we're not going to cut rates anytime soon. We might be at peak rates, but don't just start getting ahead of yourselves with 5, 6, 7 rate cuts priced into this market.
Right, that's the big takeaway from the minutes today, right? That, you know, the concern about maybe doing any kind of cut sooner rather than later, doing it too quickly. That was the concern. We were looking for any kind of clues about when they might cut rates. We really didn't get it. Not much different from what we got after that end of January Fed meeting, Gina. But they are still concerned about inflation kind of rearing its ugly head, and they want to make sure that they've got it squashed, if you will, and to make sure that they are on the right trajectory.
Well, and I think it's a great point that, look, this has really been about the markets getting ahead of themselves, the markets getting overconfident in one direction or another. We had Rich Clarida on earlier, and he mentioned that this is not abnormal. At this stage in the cycle, when the Fed says they're about done, the market usually gets far ahead of itself and says, okay, when are the cuts coming?
Yeah.
So this is just the stage that we're in. We're going to have to deal with a lot of market volatility and anxiety, even if the Fed remains pretty much steady as she goes.
All right, we are getting some earnings crossing the wire right now. Etsy shares now down about 6% here. The company basically said that in the fourth quarter, its EPS came in at about 62 cents a share. The Street was looking for 78 cents a share. So a miss on the bottom line. The top line was a beat, $842 million in revenue in the most recent quarter. The Street was looking for 827. So a beat on the top line, a miss on the bottom line, and gross merchandise sales, which is a number that a lot of people pay attention to, that was down on a year-over-year basis, down about 1%, though it did come in just a smidge above Street estimates at about $4.01 billion. The Street guys was looking for 3.97.
All right, guys, let's move on to Lucid. Lucid Group coming out with its earnings as well. Fourth quarter loss of 29 cents a share. That was widely what the Street was expecting. Fourth quarter adjusted EBITDA loss of $604.6 million. That is better than what the Street was expecting. They were looking for a larger loss of $667.1 million. Fourth quarter revenue, $157.2 million. That compares with an estimate of $178.4 million, so a little light there. Also coming out with 2024 production of about 9,000 vehicles, so I'm looking for kind of a year-over-year comparison. I don't see it, but Lucid right now up about 1%. This stock has been taking a beating here in 2024, down about 34%, and they've got some news about some new vehicles expected to come out in March, but nonetheless, we'll look for some more color in terms of what's coming. Right now, Lucid, though, guys, little change, just up about 0.25%.
And we're expected to get Rivian results a little bit later, too.
Yeah,
correct.
At least nice to see some stable performance in such a volatile market where we're expecting really, really big moves.
Yeah.
To have a slight beat to low expectations seems great, and you're seeing that reflected in the stock price right now. Obviously, this has been a tough market for the EV companies.
Yeah, absolutely. And we were talking, Gina and I were talking on Bloomberg Television a little while ago with a guest just kind of about the EV environment. And, he seemed to have a more positive outlook on it, but it just seems that all the stories we've gotten, guys, over the last few weeks and months is just that people just aren't buying them at the same clip.
What does our Keith Naughton say, right? It's not that they're going away. There's still, demand out there. It's just a bit of a reset in terms of how strong that demand is. We're still seeing growth, but it's just not as strong as everybody, Jennifer, thought it was going to be initially.
Yeah, indeed, and it's a question as well as whether or not the commuter is really going to hold up, because we've seen that very strong spending, but if we're going to have the Fed continuing not to cut, there could be some real weakness there.
All right, guys, continuing to wait for NVIDIA. Should be out in maybe about 10 minutes. That stock's up about 0.7% in the aftermarket, but again, waiting for those results. That's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We and the team, the whole team, we'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec. on Bloomberg Radio.
Felt a little like I was dressed up and no place to go waiting for those NVIDIA earnings, but we knew that they probably wouldn't be out. We've got probably about another 11, 12 minutes, but I'm keeping my eye on my Bloomberg. Stock's up about 0.5% in the aftermarket, but that doesn't necessarily mean anything. As we said, NVIDIA out in just about 10 minutes. Just about any way you cut it, the report has had the entire market on edge today and has really been an investor focal point for at least the last week or so. And as Bloomberg News equities reporter Carmen Reinecke writes, in a story that has been among our most read at the top of the list today on the Bloomberg, NVIDIA's market-leading advance has left even the bulls questioning if an earnings beat will be enough to propel the AI chip makers' shares higher. Carmen here in our Bloomberg Interactive Broker studio. Carmen, an important report. We talked with our Ian King. It's like, can they show a triple-digit growth in revenues for a third quarter in a row? That's going to be a big deal. But tell us a little bit about what you've been thinking about this name that Goldman Sachs has said, the most important stock around.
Yeah, I mean, everyone is really focused on this report, and it makes sense, right? NVIDIA is the AI name. It is the leader. It's been the market leader. This year, it's the best performer on the S&P 500 index. That's
Again,
the same,
right?
Yep, that's the same as last year. By and far, the outstanding performance of the year. And everyone expects the report actually to be pretty rosy. They're expecting NVIDIA to show that it has, again, like tripled revenue and that it's looking for even more going forward. So I think what's really going to come down to today in this earnings release is that guidance going forward. Does it see the market for generative AI continuing to grow? What bulls I think are kind of starting to worry about is at some point there may be an inflection point, right, where orders sort of slow down, where everybody gets kind of the chips that they need, and maybe they don't need to re-up them quite as fast. And we just don't know when that will happen.
Hang on one second. Rivian just out, and that stock's down about 1.4% in the aftermarket, giving an outlook. Sees fiscal year production of 57,000. The estimate was for 80,000. It's also cutting 10% of salary jobs. So there were some concerns. The stock is now down about 7% in the aftermarket, bouncing around. So again, a very negative outlook for Rivian, another big player closely watched in the EV space. We know it's been troubled, but again, down about 8.5%. We're here with Carmen Reinecke, though. We're talking about NVIDIA, kind of waiting for that one as well. Give us some size and scope in terms of, we've been talking about this with Abigail Doolittle, about the importance to this name when it comes to market momentum and sentiment.
So we already talked about how it's the biggest performer. The other thing that's so important about NVIDIA is just that its market cap is huge. It's more than $1.5 trillion. It's the third largest weighting in the S&P 500 index. That means that a swing in either direction for this stock adds or erases billions of dollars for investors in the market. And I think the implied option volatility for this earnings report coming out tonight was an 11% move in either direction. If that is what happens, that would be the biggest add or loss that we've ever seen, and that is really only topping Meta, which we just saw a few weeks ago. They're huge add after earnings. So that's part of the reason why the AI piece of the puzzle is super important here. That's really like the future that investors are looking for. But this size that NVIDIA has gotten to makes it pack that extra punch. And so important for investors watching tonight.
I wonder if you could talk us through the history, not the ancient history, but the recent history of NVIDIA and its announcements to the market on its quarterly reports, because it hasn't necessarily always been a great reaction on the part of market participants.
Exactly. And I mean, if you looked at the last couple earnings releases, the move after the report doesn't give us a ton of optimism, actually, that we will see something today. So the last two releases, there actually wasn't a big move. In one, NVIDIA beat on their report, but just the lofty expectations that investors wanted weren't there, and so the shares were pretty muted. In the second case, they beat. The shares did go higher in the after hours, but there was a rout the next day in the S&P 500, which really pulled back that gain and kind of erased it. So, I mean, those two don't give a lot of confidence for what will happen today. Right. Of course, what everyone I think is kind of poised for or waiting for or hopes would happen is that we see something like the quarter last year where it gave this huge revenue guidance and the shares shot up and kind of took it into this next level and kicked off the rally that we've seen in the last
It's kind of crazy how uber focused we are on this name. It's almost like hurting my head that we just kind of, I'm afraid to look away. But I do think about, as you cover equities and you cover the markets, both of you, like in terms of market talk, is there another name? I'm trying to think that I feel like Tesla sometimes we've been obsessed. Apple we get obsessed about. Like it's almost akin to that.
It is. I mean, I think this year, continuing from last year, it's been all about the Magnificent Seven. So any of those names are really top of mind. Obviously, some of them capture, like NVIDIA or Tesla capture, I think, a little bit more of the imagination of investors or just get a little bit more attention. But these big tech stocks, they're really it, and this is where people are focusing, and it's a trend that we're seeing continue.
What's your biggest worry about the NVIDIA earnings on the downside? I mean, obviously, we've been talking on and on and on about AI, but I mean, they do more than this. And so is it really just a tale of these two cities for NVIDIA? Or is there anything else that investors should really be looking at?
I mean, I think if there were any signs of weakness, the other thing that people are really looking for on NVIDIA's call is an answer around China. That's been sort of an overhang for the stock. It's assumed that they'll be able to develop a chip that they'll be able to sell in that market, and that may come out, or there will be an update on that soon. So I think that's the other thing that people are looking at. A lot of bullish investors say that, even without China, things are still really good for NVIDIA. So it's not the hugest thing, but that is something else that's also
I also do wonder if there is somewhat of a disappointment or if there's a surprise to the upside. I mean, Wall Street is very, very bullish on this stock, and I do wonder, kind of what do we get either later today or more likely early tomorrow in terms of kind of ratings reviews or price target reviews, where I feel like everybody's always constantly playing catch up on these names that just are on a tear.
Yeah, I mean, we'll see. That is definitely something that happens. If there is a big outperformance, I'm sure we'll see price targets run up. The other thing, honestly, even if we have a surprise to the downside, one thing that we've seen time and time again with NVIDIA is that there are buyers waiting to rush into this stock if they see anything that they can perceive as a discount. So that's why we've seen a lot of sort of, little blips up, down, and then shooting back up. So I think that's also something that we could really see if there is a surprise to the downside. People saying, okay, now it's on sale. We still believe in the long-term story. Let's go.
And indeed, people who's just and focus on it just became too much for them, and they step back, and then they get themselves in there when they see the dip.
Yeah, I mean, it's interesting. I feel like on these kind of names where people feel like the fundamental story, the core story is still intact, maybe even if it doesn't live up to the lofty evaluations, they're like, it's an entry point for me. Like the stock is on sale, right?
Exactly. Well, and if you missed the rally in the last almost year, you really want to get in because you think, okay, maybe it could go higher, and I don't want to miss out. You have some FOMO.
It's amazing to think that there could even be any FOMO left anywhere in the market, given the run-up that we've been seeing.
Right, exactly.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
You're listening and watching Bloomberg Business Week. Carol Master, Jennifer Ryan. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 421 on Wall Street. NVIDIA is out. The stock bouncing around after hours after an initial pop higher. Right now we are looking at NVIDIA. It is now lower by 2.5%. People digesting the latest numbers out of NVDA. Some of the headlines right off the Bloomberg Professional Service. First quarter revenue, $24 billion, plus or minus 2%. Estimates were for $21.9 billion. Also, fourth quarter data center revenue, $18.4 billion. Estimates, $17.21 billion. So again, people going through the report, stock bouncing around after hours. Right now, though, the key takeaway after an initial move higher, we're looking at NVIDIA right now, down by 2.9%. We're also keeping an eye on Rivian Automotive. That stock selling off big time after hours, down 15.6%. It has revealed plans to cut about 10% of its salaried workforce. It has also set production plans well below Wall Street's expectations. Stocks today did advance with the Dow Jones Industrial Average moving higher by 48 points, up 0.1%. Buying into the close with the S&P up 6 today, up 0.1%. NASDAQ lower by 0.3%. 10-year yield 4.31%. The 2-year 4.66%. And today we did have spot gold right now little changed, up 14 cents the ounce to $2,044. Crude up 1.3%, 78.01 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. NVIDIA shares, they are down about 3% in the aftermarket. Let's break it down, trying to make some sense of as the stock bounces around. Initially slightly higher, now slightly lower. Let's get to it with Lucas Kay, semiconductor analyst at Third Bridge, joining us here in New York City. Lucas, the outlook for first quarter revenue looks upbeat. What is your initial thoughts on the release?
Thanks for having me. Just at a glance here, we saw that the beat in revenue expectations, as expected, came from the data center segment. And we're seeing a common trend over the past couple quarters where the data center revenue that follows the quarter before seems to eclipse the entirety of NVIDIA's quarter-to-date revenue. So it kind of shows this strong growth trend continuing within the AI chip consumption across its customers. Now, you mentioned the guidance. It's also a strong signal that, despite what many think in the market regarding competition and some customers looking to, let's say, reduce dependency on some NVIDIA chips, we're seeing this timeline maybe not as quickly up to par as expected, and that in the meantime, consumers will continue to purchase these GPUs. This is evident. We saw just a couple weeks ago, Mark Zuckerberg and Meta kind of making this commitment for 350,000 H100 GPUs, which, on the low end of revenue for NVIDIA, which would be about $7 to $8 billion just from one company.
Hey, I do want to mention a few more headlines crossing. First of all, NVIDIA saying data center sales to China declining significantly, and also talking about generative AI has hit a tipping point. I'm actually looking at the press release where they are talking specifically about that. There was a quote in here, and I'm just looking for it. I'll continue to look for it. But anyway, saying that generative AI has hit the tipping point. I'm trying to make sense, though, of how the stock is trading here in the aftermarket. So help me out here to understand that now we're up about 1% here. We've been down. Lucas, how do you, I don't know, are you making sense of it as we bounce around? Where are some of the concerns? Because it feels like a hesitant trade here.
Lots of volatility, as you mentioned. Regarding some of the concerns, I'll speak to China first here quickly. This has been an area of discussion for long-term growth concerns for NVIDIA for a couple quarters now. They mentioned that ongoing restrictions and technology more or less sanctions that are being placed on markets like China are going to limit their long-term growth potentials here. And although the company said that in the short term, and this was a couple quarters ago, that they wouldn't see some material impact, 2024 into 2025 is when they would start to see some pains coming from this China market. As it stands today, China is anywhere from 25 to 30% of NVIDIA's total revenue, certainly a significant aspect of this. Now, another concern that comes to my mind is the issue of supply. Given that NVIDIA relies so heavily on TSMC for their most advanced chips, we're seeing sort of a buildup, a shortage in GPU availability given some of the advanced packaging constraints. Now, I'm not sure if this has been something that has been mentioned already by the company, the recent release, but this is something that investors are going to be keen to keep an eye on.
All right, just want to mention that we've got NVIDIA shares now up about 1%, NASDAQ E-minis in the aftermarket down about 0.4%. That quote I was looking for in the press release, thank you team for finding it for me. Accelerated computing and generative AI have hit the tipping point. Demand is surging worldwide across companies, industries, and nations. That is from Jensen Huang, the founder and CEO of NVIDIA. I do also want to point out our Ian King weighing in and said that maybe some of the disappointment has to do that the sales forecast fell short of the most bullish estimates. So the revenue in the current period will be about $24 billion, the company said in that statement. Though that beat the average analyst projection of $21.9 billion, estimates, Jennifer, had ranged as high as $26.1 billion. There's always a range, there's a high and a low. And so, we used to talk a lot more about whisper numbers. We don't as much anymore. But obviously, there was some higher expectations, and maybe that's what some of the disappointment is. And that's why you've seen the stock bounce around. Still up about 2% aftermarket.
Yeah, it's interesting that there's the focus on the high there. I mean,
from the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurise the handle, the gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I wanted to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
Into their own AI ecosystem to really bolster the whole industry. Just last year we saw over 30 investments into private companies that NVIDIA has done. We're hearing that they could easily surpass this year. We're already seeing some investments pour into AI companies. They're going to further strengthen their position, whether it's in technology or IP, to, as I said previously, kind of build this ecosystem that, not only their customers, but eventually their competitors will have to be dependent on as well.
Interesting, watching the trade here in the aftermarket. NVIDIA shares up now about 6.5%. Another headline that crossed NVIDIA saying China sales decline caused by the U.S. rules. We know the tensions between the United States and China, and certainly the pushback when it comes to high tech. That has certainly impacted various companies, U.S. companies, Chinese companies as well. So interesting, though. But we're seeing the momentum build up about 7% here in the aftermarket. Just to rehash, the company sees first quarter revenue of $24 billion plus or minus 2%. The estimate that the street had was $21.9 billion. Fourth quarter data center revenue, key when we talk about AI in this company, $18.4 billion. Jennifer, that is above the estimate that was out there of $17.21 billion. So here's a stock that was down 4 days in a row going into earnings. I think as much as about a 9% or so move, if you will, maybe not a quite technical correction here, but now we're seeing it move up about 6.5% in the aftermarket.
Yeah, and so I very much wonder what the read is going to be when we come in tomorrow morning, if this flipping around is going to continue. But now we've just had another headline crossing that again is more than 7% after the earnings, after having started out down. So investors will have more time to digest, and we'll see if that continues tomorrow.
Other things on your radar, Lucas, we've just got about 30 seconds left here. As you think about this company, what you will be watching in the current quarter that's important you think that our investing audience needs to keep an eye on? Just got about 30, 35 seconds here.
Absolutely. And, just beyond even the current quarter, because one thing to keep in mind is that these orders are processed a couple months ahead. It could take customers even anywhere from 6 to 8 months to actually receive the shipments. I'm looking at more of a long-term growth outlook here. You mentioned China. I think in the short term, demand from areas like North America and the EU, these growing data centers will be enough to offset some of the issues that we see. It's more of a long-term question of how NVIDIA will continue to grow that revenue base with maybe a significant portion of that missing.
All right. Really appreciate you weighing in on this. Lucas, thank you so much. Lucas Kay, semiconductors analyst over at Third Bridge here in New York City, watching shares of NVIDIA up now about 6.5% here in the aftermarket. So certainly something we'll watch into the Thursday trade. Right now, though, we want to shift gears, world and national news, and see what's on Nancy Lyons' agenda. Hi, Nance.
Thanks, Carol. The top Democrat on the House Oversight Committee says he believes the impeachment inquiry into President Biden is over. Maryland Democrat Jamie Raskin spoke after a closed-door testimony from the president's brother, James Biden, today.
We have heard nothing indicating that Joe Biden had anything to do with the business ventures of Hunter Biden or James Biden.
Raskin says James Biden flatly denied that his brother had any involvement in his overseas business dealings, which have been under scrutiny by House Republicans. The Justice Department recently indicted an FBI informant, Alexander Smirnov, for making false statements about President Biden and his son Hunter. He was a key part of the GOP's allegations against the president. Ukraine is near an agreement with the International Monetary Fund to get the next $900 million disbursement from its $15.6 billion loan, a boost to the nation's war-ravaged budget, and a vote of confidence as U.S. aid remains on hold. A familiar voice from cable news is jumping into politics.
I'm John Avlon, and I believe the United States is the greatest democracy the world has ever known. But right now, our democracy is in danger.
The former CNN anchor posted that video on YouTube to announce that he is running as a Democrat in New York's 1st congressional district. That eastern Long Island seat is currently held by freshman Republican Nick LaLota. The University of Alabama at Birmingham is pausing in vitro fertility treatments as it examines a ruling by the state Supreme Court that determined frozen embryos should be considered children. The school says it's evaluating the potential their patients and physicians could be prosecuted criminally or face punitive damages for following the standard care for IVF treatments. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. NVIDIA shares now surging up by 6.4% after hours. Moments ago, we heard from NVIDIA. It is predicting another massive sales gain for the current quarter, helping justify a stock rally that has turned it into one of the world's most valuable companies. Now, initially, we saw shares of NVIDIA move higher. They then declined as people went through the earnings release. Right now, NVIDIA has reversed course. It is up now by 6.1%. Stay with Bloomberg Radio for the latest on the market's response to NVIDIA. Now, ahead of the earnings report, we saw stocks actually gain. The S&P have been lower for most of the day, but into the close ended with an advance of 6 points, up 0.1%. The S&P at 49.81. The Dow up 48, up 0.1%. NASDAQ, though, lower by 49, a drop there of 0.3%. 10-year 4.32% with a 2-year 4.66%. As for the overall market backdrop, the economy and the Federal Reserve, Lisa Erickson is head of Public Markets Group at U.S. Bank Wealth Management, and she was a guest right here on Bloomberg Business Week.
We've had quite a bit of run-up, and so that does produce some cautiousness. And when you actually look at the overall growth levels, what you see is that growth certainly has been better than expected, but at absolutely low levels. And, you know, when you have really tighter interest rates, as well as the fact that growth has been on a lower trajectory, that really usually isn't a good recipe for stocks.
And you can hear more of that conversation on the Bloomberg Business Week podcast. Again, recapping stocks end of the day. The S&P end of the day higher. NVIDIA reporting earnings that top some estimates. We've got NVIDIA right now higher by just about 6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Yes, indeed. All right, Charlie, thank you so much. We're going to keep a watch in case any other headlines come across on NVIDIA. In the meantime, it is out, obviously, at the epicenter of the AI craze. And I do feel like, Jennifer, lots being talked about how AI may replace workers, different maybe from the last big automation wave where many blue-collar jobs were taken out. This time around, the concern is that artificial intelligence will make white-collar jobs obsolete. That's one of the concerns that's out there.
It is, and then you wonder if you've got your job at stake, you might perhaps think I might be well advised to work a little harder, work longer hours, for example. And, you know, that might have some very bad impact onto your health of your family, and maybe even the health of your company.
This from two workaholics. I can feel it. I can feel it. All right.
We're trying to justify it.
I will say the flip side, too, is AI might ultimately help us. But anyway, we wanted to get some thoughts on how we work and overwork on a day that we had a lot of news flow, very, very busy. With us right now is Melissa Clark, Associate Professor of Industrial Organizational Psychology at the University of Georgia, Director of the Healthy Work Lab at UGA. She's got a new book out, Never Not Working, Why the Always-On Culture is Bad for Business and How to Fix It. She joins us from Athens, Georgia. Melissa, nice to have you here with Jennifer and myself. We want to get into the book, but I do wonder, in your day job and the things that you talk about with your students, the role of something like, we are talking about AI all day. We've been obsessed with it because of NVIDIA's results, but I wonder how you think about it. What are some of the conversations that you're having in the classroom and in your Healthy Work Lab? Is this a good thing or a bad thing, or we don't know yet?
Yeah, that's a great question. One thing with AI that I find very interesting, it's, you know, I'm less concerned about it replacing our jobs. I feel like there's always going to be a need for humans, but it's also making us more efficient. And so one thing that I am very curious about is with AI, with technology, things that are faster to do, why are we adding more to our plate? And, you know, why are we not leveraging the efficiency of things like AI to work smarter instead of longer?
Well, I guess would an answer there, if you would forgive me, would an answer there be competition? Because you've got everyone's trying to feel their way around this new AI world. Everyone's trying to work out how they can get a leg up on their competition. And so that's not the time when you want to see companies start to pull back. But I mean, I know this is something that you study, and this is, you've had a lot to say about it. So I mean, what's your response to that kind of a view?
Yeah, I think one of the common myths is that working all the time is going to lead to greater productivity. And, you know, I understand the need to keep up with the competition. But I think we need to think of the long game, too. because burnout is so prevalent now, and it's just not sustainable to be working these really long hours and not giving ourselves the rest and recovery that we need so that we can be sharper and more creative and more innovative. I mean, think of how tired you are at the end of the day compared to the beginning of the day. I don't know about you, but I do my best writing in the morning and I'm sharp. And so, leveraging tools like AI to be able to shorten, it's almost like wasted time at the end of the day when you're not as productive. So why don't you just call it a day then? And also you're improving your employee satisfaction, and they're going to want to stay at the company. So I do think, yes, I understand the urge to just keep on going because that's what everyone else is doing. But maybe think a little bit more strategically and think about the long game as well.
What's interesting is when I think about how I grew up too, it's just like work harder. Put in not 100%, but 150% into anything you do. Having said that, I get what you're saying, and I think coming off of COVID, we talked a lot more about balanced work situations. And what's interesting is that may play true in a tight labor force where companies are worried about losing workers. I do wonder as that shifts whether or not employers care so much about the work balance. I'm not being critical or making, a viewpoint, but, employers have things that have to get done. And, they're going to be deadlines. What's the right balance? Because it does sound like this is an argument or something you need to be telling employers because
yeah, definitely. And I'm not against hard work. I struggle myself with being a workaholic. That's partly why I wrote the book. And so, I think it's about fostering an environment where you are working very hard when you're at work, and you have an engaged workforce, which has a ton of positive outcomes according to research. But you're letting your employees disengage when they leave work. And that has been shown to lead to a ton of positive outcomes and greater performance. And so it's almost like you're leveraging the best of both worlds. I do think it's possible. And we can use AI and the other, and technology to help us accomplish that.
I wonder if you could talk a little bit about the policy space here, because certainly what you see for companies in Europe, for government officials in Europe, there's a right to switch off. There's a right not to get emailed. It's not necessarily in every country, but it's certainly a vibe that you've got over there. And, here in the United States, do you see any similarities anywhere with that culture?
I'm not seeing that happening here in the U.S. I would love it, but I'm a realist too. And so I do think this is going to have to be at the company level. And, I think there are things you can do in your organization to have similar policies, even if it's just a pop-up that you're trying to send an email after hours and a pop-up occurs and it says, are you sure you want to send this at 9 p.m.? Or maybe you schedule it for the morning. What's wrong with that? Is the deal going to go bad because you didn't send an email at 10 p.m.? Maybe, but probably not. Things are, not as urgent as we tend to think they are. And, for those dire projects, sure, maybe you need to work outside of your normal work hours, but I don't think every project necessarily has to be like that.
Hey, Melissa, got just about a minute left here. I feel like there's a million more questions we could ask you, but what's the biggest misconception about working harder, longer? We all think that's a good thing, but maybe it's not necessarily always a good thing. And unfortunately, just got about 30 seconds.
Yeah, I mean, it's just, it's a myth that, working harder will lead to greater productivity. Workaholics tend to think everything's a crisis. And I think it's important to think about the big picture and be forward thinking instead of backward thinking. And so that's my take on it.
It's an interesting point, isn't it?
Right?
Not everything is a crisis, ladies and gentlemen. There's another way to think about that. That's a really interesting thing to take away.
It's a really smart message here. All right, listen, great stuff. Glad we got some time with you. Melissa Clark, Associate Professor of Industrial Organizational Psychology at the University of Georgia. She's got a new book out, Never Not Working, Why the Always-On Culture is Bad for Business and How to Fix It. So check it out, everybody. Hey, watching NVIDIA shares still up about 7% in the aftermarket. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. NVIDIA, our top story after ours. NVIDIA shares now at the best level, surging 8.3%. We continue to monitor the stock as it pushes higher right now. It did predict another massive sales gain for the current quarter, helping justify a stock rally that has turned it into one of the world's most valuable companies. Again, after ours right now, we've got NVIDIA pushing higher by 8.25%. Revenue in the current period will be about $24 billion. Analysts have predicted $21.9 billion on average. Lucas Kay is semiconductors analyst at Third Bridge, and he was a guest right here on Bloomberg Business Week as he sorts through the numbers.
We saw that the beat in revenue expectations, as expected, came from the data center segment. And we're seeing a common trend over the past couple quarters where the data center revenue that follows the quarter before seems to eclipse the entirety of NVIDIA's quarter-to-date revenue.
And again, after ours, the stock just keeps on going higher, now up by 8.8%. We got you covered here on NVIDIA. The other big story earnings-wise after the close of trading, we heard from Rivian Automotive. It has revealed plans to cut 10% of its salaried workforce. It also set production plans that were well below Wall Street's expectations as the maker of EVs grapples with stagnant demand and economic turbulence. The company plans to build 57,000 vehicles this year, roughly in line with its 2023 output. Turned out to be a mixed day on Wall Street today. The Dow, the S&P both moved higher. NASDAQ declined. One of the standouts today after earnings, we did hear from Toll Brothers. That stock also moved higher today. The luxury home builder rose to a record. Those are our top company stories at this hour, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, getting ready to wrap up a busy Wednesday edition of Bloomberg Business Week. Carol Masser along with Jennifer Ryan, of course, Jennifer in for Tim, who is out today. Coming up, though, Doug Krisner. He's joining us here in studio because over the next couple of hours, we've got the Asia Open. NVIDIA, top of mind, up 8%.
Yesterday, as of the closing price, I think this was a $1.7 trillion market cap on this company, and we have the stock up 8% now in late U.S. trading.
They're the biggest, right, when it comes to, I think, market weighting.
There was a whisper number in terms of revenue that was higher than I think NVIDIA was able to deliver. They beat expectations, and I think that's what's going on right now. There's a big question mark over what's happening in China, and a lot of that, it shouldn't come as a surprise because of the export controls. But the other thing that was interesting today, Intel had a meeting, and at this meeting, Commerce Secretary Gina Raimondo was talking about chip demand, artificial intelligence. She's basically asking for another CHIPS Act, saying that if the U.S. doesn't get its act together, particularly as it relates to AI, this space is moving so quickly and the demand is so great that we need to get the supply factor up in a major, major way.
That's such an interesting thing because you would think that having done one CHIPS Act, that could potentially be enough. But she can see that it's so important to focus minds and to get the development of the supply chains in order.
Supply chains and then the chips themselves, I think that's one of the things that I'm interested in now. I mean, NVIDIA has owned this space. Advanced Micro Devices, Intel, these are companies that are trying to get into the space, but engineering the chips themselves that can function with, incredible velocity, but with low power. I think that's going to be, the next challenge here. So it's as much about developing production, but it's also about R&D and the next generation of chips.
Well, it's very interesting, right, in terms of, the U.S. getting involved, right, in business development or supporting an industry specifically in its domestic home front, whether or not.
We've been critical about China doing the same thing. State-supported companies, this may smack of that.
Yeah.
And it's something that, the World Trade Organization may have to weigh in on at some point. I don't know.
But it's certainly something that you see complained about in Europe quite a lot because you have a national industrial policy, national champions, but it's not state support. That's a very fine line to tread.
It is a fine line. It is a fine line.
Yeah, so I think that's kind of interesting. We also, we kicked off our broadcast at 2 with those Fed minutes. We were looking for any clues of what the FOMC and Jay Powell and company need to actually cut rates, didn't get anything. If anything, it just sounds like, I felt like from Mike McKee, like this idea of maybe we're higher for longer at this point.
I think that's right. I mean, and I say that only because I was looking at the Michelle Bowman commentary.
Yes,
she's one of the
saw
more
that too.
hawkish members. You know, she was appointed by former President Trump. She was also critical of a lot of the capital programs that regulators want the banks to adopt now, increase their capital buffer. So she was critical of that. But she's saying right now in the current environment, this is not a time to cut interest rates. So there was that hawkish voice. And I think the Fed, Tom Barkin from Richmond was basically making the same case today. Price pressures in many sectors of the economy are still too high.
Right.
This is not the time to cut rates.
And their
which is
fear
not to say that the next move is going to be a hike. That was the talk yesterday.
Right.
Larry Summers was talking to David Weston at the end of last week, assigning a 15% probability.
Right.
That's low, but he was saying, you know, given the persistent nature of inflation here in the U.S., maybe the Fed's next move is to raise rates.
But this is the fear, right, that the Fed cuts rates too early, and this is what they want to.
Right.
They're
They
so
want to avoid
concerned
that at
about-
all costs.
Right. Their concern is that all of a sudden inflation, there's an uptick, and then now what do?
So I think in Fed speak, what they were saying, the risk of keeping rates higher for longer basically is not as great